Building wealth from nothing is possible for anyone who is willing to take control of their money, their habits, and their daily choices. This audiobook will show you how to go from zero to financial security step by step. With practical guidance you can start applying today. You will learn how to manage your expenses, increase your income, save consistently, invest wisely, and develop the discipline that leads to real financial freedom. Each chapter focuses on simple, actionable steps designed to help you improve your life and build lasting wealth. You will discover how to create a clear financial plan, stay motivated through progress, and make decisions that protect your future. By following these strategies, you will gain confidence in your ability to handle money, avoid common mistakes, and grow your resources steadily. Along the way, you will also learn how to give back, find purpose in your wealth, and create a life that is not just financially successful, but meaningful. If you are ready to take control of your financial journey, develop habits that lead to long-term success, and transform the way you think about money, this audiobook is your guide. It is designed to inspire action, teach practical skills, and help you build a foundation that will support your growth for years to come. By the end, you will have the knowledge, motivation, and mindset to move confidently toward wealth and independence while making choices that improve every aspect of your life.
Chapter 1. Start tracking every expense to control your money.
Chapter 1 begins with the most basic, but also the most powerful step in the journey of building wealth. To change your financial future, you must begin by knowing exactly where every single unit of your money goes. This may sound simple on the surface, but it is a discipline that separates those who drift without direction from those who take control of their lives. You cannot improve what you do not measure. If you want to move from zero to wealth, you need to see your financial reality with absolute clarity. Tracking every expense is not about depriving yourself, but about giving yourself knowledge and power. It is the foundation on which everything else will stand. Without it, every financial strategy remains weak and uncertain. With it, you hold a mirror to your behavior and discover the truth about how your choices shape your future. At first, this practice may feel uncomfortable. You will see things you would rather ignore. You will notice how often small purchases add up to large amounts over weeks and months. You will recognize that many of your financial challenges are not caused by lack of opportunity, but by unnoticed habits. The truth can sting, but it is also liberating. Awareness gives you the ability to make better choices. Each expense you record is a step away from blindness and a step toward mastery of your money. When you commit to tracking every expense, you begin to build a new relationship with money. Money stops being a vague concept and becomes something concrete. You learn that every decision carries weight. The coffee on the way to work, the impulsive online purchase, the unused subscription, all these become visible. You see not only what you are spending, but what you are giving up. You start to calculate in your mind how much of your future freedom is traded for fleeting comfort. This realization creates accountability. Practical application begins with a simple system. You do not need complicated tools or advanced apps. A notebook and pen are enough. Write down every expense the moment it happens. Carry this small book with you and treat it like a companion. If you prefer technology, use a note app or a budgeting tool, but remember that the tool is not as important as the discipline. What matters is consistency. The record must be complete. No purchase is too small to track. Even the smallest amount teaches you something. As days turn into weeks, you start to notice patterns. You may see that certain categories dominate your spending. Perhaps food outside the home consumes far more than you realized. Perhaps small impulse purchases occur every few days and eat away at your progress. These patterns are your teacher. They reveal what your values truly are, not what you claim they are. If you say you value security but most of your money flows into entertainment, then your actions are not aligned with your intentions. This misalignment becomes clear through tracking. From this clarity comes the first opportunity for change. You no longer need to guess where to cut back because the evidence is right before you. If a category drains too much, you can reduce it with precision. Instead of vague advice like spend less, you create a concrete action such as reduce dining out from 10 times a month to 4. This specificity makes improvement possible. It also strengthens discipline because you are not trying to change everything at once. You are addressing what matters most. Beyond reducing costs, tracking expenses develops a mindset of awareness that touches every area of life. You begin to pause before each purchase. You ask yourself if this expense fits into your larger plan. You ask if it is worth recording in your book. This pause is powerful. It creates space between impulse and action. Many financial mistakes happen in the absence of reflection. By tracking, you insert reflection into every transaction. Over time, this habit sharpens your judgment. It is important to understand that this practice is not about restriction, but about freedom. Many people resist tracking because they fear it will make them feel controlled. In reality, the opposite is true. When you do not track, money controls you because you are blind to its movement. When you track, you take command. You choose with intention instead of reacting without thought. Freedom is not the absence of discipline, but the result of discipline. Some days you may feel the weight of recording every detail. The temptation will arise to skip a purchase or to say that small amounts do not matter. This is where resilience comes in. The discipline of tracking is not about perfection for one day, but about consistency for a lifetime. Wealth is built through steady habits, not occasional bursts of effort. Each time you track even the smallest expense, you strengthen the habit. Each time you resist the urge to ignore, you build self-control. The emotional impact of tracking is also worth noting. At first, you may feel guilt or frustration when you see how much you waste. This is natural, but temporary. Do not dwell on guilt. Instead, treat it as evidence that you are now awake. Awareness always comes with discomfort. As weeks pass, the guilt shifts into pride. You begin to feel empowered when you see your discipline reflected in the numbers. You realize that you are no longer drifting. You are steering your ship. There is also a psychological reward in watching improvement. Imagine reviewing your records after 3 months and seeing dining expenses cut in half or subscriptions cancelled. You see actual progress. Progress is one of the greatest motivators. It proves that effort brings results. It fuels your confidence and makes you want to continue. Progress, no matter how small, creates momentum. This momentum is the beginning of wealth. Tracking also prepares you for the next stages of building wealth. Without records, you cannot set accurate budgets, measure progress toward goals, or plan investments. You need history to predict the future. For example, if you want to save for an emergency fund, you must know your monthly expenses. Without tracking, you are guessing. With tracking, you are precise. Precision is what transforms hope into strategy. Consider how professionals operate. Businesses track every expense because survival depends on it. No company would survive long if it ignored where the money went. You must treat your personal finances with the same seriousness. Your life is your business. Your habits determine whether you thrive or struggle. By adopting this professional standard for yourself, you elevate your mindset. Practical steps to strengthen this habit include setting aside a daily review time. At the end of each day, sit quietly for 10 minutes and review what you spent. Record everything if you have not already. Reflect on whether each expense brought value. Over time, you will become more mindful during the day because you know the evening review awaits you. Another step is to categorize expenses into needs, wants, and waste. Needs are essentials like food and shelter. Wants are things that bring comfort or enjoyment, but are not necessary. Waste is money spent without real value. This simple classification sharpens judgment. Another helpful practice is to calculate the true cost of recurring expenses. Many small recurring costs look harmless until you multiply them by 12 months. That streaming service you rarely use may look like only a small amount, but across a year it becomes a meaningful sum. Seeing the annual cost brings clarity. This clarity often leads to immediate change. You will also notice that tracking influences how you view future income. When money comes in, you know exactly where it will go because you know your spending patterns. You stop being careless with extra income because you see how quickly it can vanish. Instead, you assign each new dollar a purpose. This habit of giving money a purpose is one of the foundations of wealth. Discipline in tracking spills over into other areas of life as well. The same awareness that helps you control money helps you control your time, your health, and your habits. You begin to see connections. If you track your expenses, you may also begin to track your exercise or your daily routines. Awareness breeds improvement. Improvement in one area strengthens improvement in others. This is how personal growth compounds. The philosophy behind tracking is deeply Stoic. It is about facing reality with courage and discipline. The Stoic does not hide from truth, but embraces it. By recording every expense, you refuse to lie to yourself. You refuse to cover mistakes with ignorance. You accept responsibility for your choices. This acceptance is the first step toward mastery of self. Wealth without self-mastery is fragile. Wealth with self-mastery is unshakable. The long-term impact of this practice cannot be overstated. After 1 year of tracking, you will have a complete picture of your financial life. You will know your true cost of living, your patterns of spending, your strengths, and your weaknesses. This knowledge becomes a tool you can use to build goals, eliminate debt, save for the future, and invest wisely. It also builds character. The person who can track expenses with consistency is the person who can achieve anything with consistency. The journey from zero to wealth does not begin with luck, inheritance, or sudden opportunity. It begins with discipline. The first discipline is awareness of your money. If you can master this, you will already be far ahead of most people. Most never take this step. They prefer ignorance because it feels easier in the short term. But ignorance always costs more in the long term. Awareness may feel heavy at first, but it brings strength and freedom. In closing, tracking every expense is the cornerstone of financial transformation. It is simple yet powerful. It demands honesty, patience, and daily effort. But it rewards you with clarity, control, and confidence. With this practice, you lay the foundation for every other wealth-building strategy that follows. Without it, no strategy will stand. Begin today, continue tomorrow, and never stop. The discipline of tracking is not temporary, but lifelong. It is the constant reminder that you are in control of your money, and therefore in control of your life. Wealth begins here, and nowhere else. Chapter 2. Build a clear financial goal that drives your actions. A life without a clear financial goal is a life spent moving in circles, but when you create a definite target, you give every action a purpose and every decision a direction. The difference between those who drift and those who build wealth is not intelligence or luck, it is clarity. When you know exactly what you want to achieve with your money, you stop wasting time and energy on distractions, and you begin to shape a future that matches your vision. Building a financial goal is not just about numbers on paper, it is about defining the kind of life you want to live and giving yourself the structure to reach it. The first step is deciding what matters most to you. Some people want security and peace of mind. Others want freedom to travel or pursue passions, while others want to leave a legacy for their children. A goal is not truly yours unless it is tied to your personal values. If you chase a target that does not align with who you are, you will eventually lose motivation. This is why the process begins by asking yourself what kind of life you want in the next 5 years, 10 years or 20 years. Picture not only the lifestyle but also the responsibilities you want to fulfill. Once you are clear about your priorities, you can translate them into numbers and timelines. A financial goal must always be specific. Vague statements like "I want to be rich" or "I want to save more" will not drive consistent action. Specificity gives you something concrete to measure. For example, deciding that you want to save 1 year of living expenses within 3 years is precise. Setting a goal to pay off a certain amount of debt within a defined time period is clear. The sharper the goal, the easier it becomes to build daily actions that move you toward it. Clarity also requires breaking down a large goal into smaller steps. If you set a huge target without milestones, it will feel overwhelming and you may quit before making progress. Imagine you want to save the equivalent of 12 months of expenses in 3 years. That large sum may intimidate you, but dividing it into monthly or weekly targets makes it manageable. Each small step completed builds confidence. This steady rhythm of progress keeps your motivation alive, especially during difficult periods. Another important part of goal setting is writing it down. Thoughts fade, but written goals anchor your mind. Keep your financial goals visible, whether in a notebook, on your phone, or posted somewhere you see daily. When you look at them each day, you remind yourself of what truly matters, and this constant reminder reshapes your behavior. Many people underestimate this simple step, but the act of writing and reviewing builds focus. A financial goal should also be measurable. If you cannot track progress, you cannot know whether you are moving forward or backward. This is where numbers are essential. Define the exact amount, the time frame, and the steps. Without measurement, you are operating on feelings, and feelings often mislead. A measurable goal tells you when you are on track and when you must adjust. Once your goal is written and measurable, the next task is aligning your daily actions with it. A goal without alignment is just a dream. If your goal is to save a certain amount, then your spending must reflect that priority. If your goal is to eliminate debt, then extra money must flow toward repayments instead of indulgences. Every purchase becomes a test of alignment. Over time, this alignment strengthens your discipline and turns abstract goals into real results. Goals also require deadlines. A deadline creates urgency. Without it, the mind drifts and excuses take control. If you say you will achieve something someday, it rarely happens. But when you fix a clear time frame, you push yourself to act now. Deadlines transform intention into action. Choose realistic but challenging time frames. Too long and you lose urgency. Too short and you invite frustration. The right balance pushes you without breaking you. Motivation fades if you do not connect your goals to a strong emotional reason. Numbers alone are not enough. You must know why this goal matters deeply to you. Is it to provide stability for your family? Is it to free yourself from financial stress? Is it to create opportunities you never had as a child? The stronger your emotional reason, the easier it becomes to endure sacrifices. When temptation appears, your reason will remind you of the bigger picture. Another element of building a goal is anticipating obstacles. No journey is smooth. You will face unexpected expenses, setbacks, and moments of doubt. If you plan only for ideal conditions, you will fail when difficulties arrive. Think ahead about what might stand in your way and design strategies to handle those challenges. If you know that certain habits or temptations derail you, create systems to counter them. Resilience grows when you prepare in advance. You must also review your goals regularly. Life changes, and so do your priorities. A goal that made sense 2 years ago may no longer reflect your values today. Reviewing does not mean abandoning discipline, but it does mean being flexible enough to adjust direction when necessary. Regular reviews help you stay aligned with reality instead of clinging to outdated desires. One of the most powerful practices is visualizing your goal achieved. Close your eyes and imagine the relief of being debt-free, the security of having savings, or the joy of providing for your loved ones. Visualization strengthens belief. When you can see yourself living that reality, your actions naturally follow. Many successful people use this method to stay motivated through long journeys. Accountability also accelerates progress. Share your financial goal with someone you trust. It could be a friend, a partner, or even a mentor. Knowing that someone else is aware of your target makes you more likely to stay consistent. Human beings perform better when they know others are watching. Accountability turns a private promise into a public commitment. It is also important to celebrate milestones. Building wealth is a long road, and if you wait until the end to feel satisfied, you may burn out. Each time you hit a smaller target, acknowledge your progress. Treat yourself in a way that does not derail your goal. This celebration fuels motivation and reminds you that you are moving forward. Progress, no matter how small, deserves recognition. The discipline of building clear financial goals also influences other parts of your life. When you learn to set precise and actionable money goals, you become better at setting goals in health, relationships, and personal growth. Clarity in one area spreads to others. This creates a life that is focused, intentional, and directed by purpose rather than impulse. Remember that financial goals are not fixed in stone. They evolve as you grow. At first, your goal may be as simple as saving a small emergency fund. Later, it may expand to investments, property, or building a business. Each stage is built on the discipline of the earlier stage. What remains constant is the habit of setting goals with clarity and living in alignment with them. Building wealth from zero requires more than knowledge. It requires vision. Without vision, you will abandon the journey when it gets difficult. With vision, you will endure because you know where you are headed. A clear financial goal is that vision. It is the compass that guides you when emotions, temptations, and challenges try to pull you off course. The most important truth is this: you are capable of shaping your financial destiny. You do not need to accept the life handed to you by chance. By building clear goals and acting on them, you reclaim control. This is not about becoming perfect overnight. It is about moving with direction each day. Every step you take toward a defined goal is a step toward freedom, security, and fulfillment. This chapter is a reminder that clarity creates strength. Without it, you wander. With it, you build. Set your goal, define it, write it, measure it, align with it, and review it. The process is simple, but life-changing. Wealth does not appear by accident. It grows from clarity, discipline, and persistence. Begin by setting one clear financial goal today. Let it guide your choices, shape your actions, and remind you daily of the future you are building. With this clarity in place, every other step on your journey to wealth becomes easier, stronger, and more meaningful. Chapter 3. Cut unnecessary costs to free up more savings. The fastest way to create space for wealth in your life is to cut unnecessary costs that silently drain your energy and resources every single day. Many people believe that building wealth requires massive income. But the truth is that progress often starts with protecting what you already have. If money flows out of your hands without direction, no amount of income will ever be enough. The discipline of reducing wasteful spending is what separates those who struggle for years from those who steadily move forward. This is not about living in misery or stripping away all comfort. It is about removing what does not serve your purpose so you can redirect your resources toward freedom and growth. The first step is to take a close look at the daily and monthly expenses that have become routine. Subscriptions you rarely use, impulse purchases that bring no lasting satisfaction, meals ordered out of convenience rather than necessity. These are examples of hidden leaks in your financial bucket. At first they feel harmless. Each one is small, but together they create a powerful current that pulls you away from your goals. By cutting them, you immediately create space for savings without working extra hours or chasing new opportunities. The process begins with awareness. Review your past 3 months of expenses with honesty. Do not justify or excuse anything. Look at the numbers for what they are. As you study them, ask yourself which items truly add value to your life, and which ones simply fill moments of boredom or habit. You will be surprised by how much of your spending falls into the second category. This recognition is liberating because it shows you how much control you actually have. Once you identify the waste, begin removing it one by one. Cancel unused subscriptions. Eliminate fees by switching to better financial services. Prepare meals at home instead of constantly buying takeout. Choose generic brands where the difference in quality is minimal. These are not sacrifices, but conscious choices that free you from dependency on unnecessary consumption. Every cut is a step closer to stability and independence. It is essential to remember that cutting costs is not about living a joyless life. It is about aligning your spending with what truly matters. If something brings deep meaning or genuine happiness, it can stay. What must go are the expenses that neither build your future nor enrich your present. For example, if sharing a meal with family at a restaurant brings connection and joy, keep it as part of your budget. But if random delivery orders come only from laziness, remove them. This distinction keeps your life balanced while still moving you towards savings. Psychologically, removing unnecessary costs strengthens your self-discipline. Every time you resist the urge to spend on something meaningless, you reinforce control over your impulses. This control spills into other areas of life. It makes you more deliberate with your time, your energy, and your habits. Wealth is not only a matter of money, it is a matter of who you become through disciplined action. Cutting costs is the training ground for that transformation. Practical strategies make the process easier. One approach is the 30-day rule. When you feel the urge to buy something non-essential, wait 30 days before making the purchase. Most desires fade with time, and if the item still feels necessary after a month, you can reconsider. Another method is the envelope system, where you allocate cash for categories like food, entertainment, or transportation. When the envelope is empty, you stop spending in that area. This system forces you to respect your own limits. You can also challenge yourself with no-spend days or weeks, where you commit to spending only on absolute essentials. These periods reset your habits and make you more aware of how often you rely on convenience purchases. Over time, you begin to see that many of the things you thought you needed were actually optional. Cutting costs is not just about small expenses. It also applies to larger commitments like housing, transportation, and lifestyle choices. living in a place that consumes too much of your income, driving a car that is more about image than practicality, or constantly upgrading electronics to keep up with trends, all create heavy financial chains. By making smarter choices in these big areas, you unlock significant savings that accelerate your progress. One powerful perspective is to calculate the time cost of every expense. Ask yourself how many hours of work are required to pay for something. When you realize that a trivial purchase equals several hours of your life, its appeal often fades. Viewing money in terms of time connects you directly to the real cost behind every decision. This awareness helps you resist unnecessary spending. It is also helpful to surround yourself with people who respect simplicity and intentional living. If you are constantly exposed to friends who spend carelessly or measure success by possessions, you will feel pressured to follow. But if your circle values financial discipline and purpose, you will find support and encouragement. Environment shapes behavior more than willpower alone, so choose wisely. The journey of cutting unnecessary costs teaches patience. You learn that waiting often brings better results than rushing into consumption. You see that contentment does not come from buying more, but from appreciating what you already have. Patience and gratitude are virtues that build resilience. They remind you that wealth is not only about accumulation, but about peace of mind. This practice also prepares you for future opportunities. When you cut waste, you create savings. Savings are not just safety nets, they are seeds of growth. With money set aside, you can invest, start projects, or take advantage of opportunities that others cannot because they are trapped in constant spending. Cutting costs gives you flexibility, and flexibility is one of the greatest advantages on the road to wealth. The emotional shift is just as important as the financial one. Each time you make a conscious choice to save instead of waste, you feel stronger. You no longer live as a victim of advertising or impulse. You live as a deliberate actor who chooses what matters. This pride builds confidence, and confidence fuels more disciplined decisions. There will be moments of temptation, but remember that every unnecessary cost you cut today becomes fuel for your future. Think about the freedom of not worrying about debt, the relief of having a strong safety net, the pride of knowing you are building something lasting. These visions are worth far more than fleeting pleasures. Over time, what begins as effort becomes habit. At first, you may need to force yourself to question every purchase. Later, it becomes natural. You no longer crave constant consumption because your mind has shifted. You find satisfaction in progress, not in impulse. This is how you transform not only your finances, but also your character. Cutting unnecessary costs may not feel glamorous, but it is the quiet force that builds the foundation of wealth. It is a discipline that protects your resources, strengthens your mindset, and prepares you for growth. Wealth is not created by what you earn alone, but by what you keep and how you use it. Every cost you cut is proof that you value your future more than momentary comfort. The path to freedom begins not with abundance, but with discipline. By removing what does not serve you, you create room for what does. Each unnecessary cost eliminated is a step closer to stability, independence, and peace of mind. Stay consistent, stay patient, and remind yourself daily that every dollar saved is a brick in the foundation of the life you are building. The more you cut waste, the more you gain strength, and the closer you come to a future of true wealth. Chapter 4. Create an emergency fund to protect your future. Protecting your future starts with one of the smartest financial decisions you can ever make, and that is creating an emergency fund. An emergency fund is not just about saving money, it is about giving yourself peace of mind, freedom from constant worry, and the confidence to handle life when it throws challenges at you. Think about how many times Unexpected expenses have caught people off guard. A sudden medical bill, a job loss, a car repair, or even something as simple as a broken appliance. Without a safety net, these events create stress, debt, and financial setbacks that can take months or even years to recover from. But when you have an emergency fund, you change the story. You are prepared, and instead of panicking, you act with calm and clarity. The first step to building an emergency fund is to decide that this is no longer optional. Many people think they will start saving for emergencies when they earn more or when life feels easier, but the truth is, there will never be a perfect time. You must begin right now with what you already have, no matter how small. Even saving a small amount, like a few dollars a week, creates momentum and builds the habit of paying yourself first. Habits matter more than the starting amount, because habits grow. Once the routine is in place, you can increase the contribution as your income grows or as you cut expenses from your daily life. Set a clear target for your emergency fund. Most financial experts suggest 3 to 6 months of living expenses, but if that feels overwhelming, break it down into smaller steps. Aim for your first $500 or as a starting milestone. That amount alone can prevent you from relying on credit cards or loans when unexpected costs appear. Once you hit that milestone, the confidence you feel will push you to go further, and step by step, you will reach your full target. What matters most is progress, not perfection. Keep your emergency fund separate from your everyday spending account. If the money is mixed with your daily checking, the temptation to dip into it will always be there. Open a dedicated savings account just for this purpose, one that is not directly tied to your debit card. Make it slightly inconvenient to access, but not impossible, because the goal is to protect it for true emergencies only. Emergencies mean real needs, not vacations, not gadgets, not luxury items, but life situations that are unpredictable and necessary to handle immediately. Consistency is the real power behind an emergency fund. Automating your savings is the easiest way to stay disciplined. Set up an automatic transfer from your main account to your emergency account right after you receive your income. By automating, you take away the decision-making process, and saving becomes as natural as paying a bill. This shift turns saving into a priority instead of an afterthought. While you are building your emergency fund, you might feel pressure to use the money for non-emergencies. This is where discipline comes in. Remind yourself that the purpose of this fund is to protect your financial future. When you are tempted, think about the stress of having no money when you really need it. That memory will help you stay strong. Your emergency fund should become untouchable for anything other than true urgent situations. Another key point is to match the size of your emergency fund with your lifestyle. If you live alone, your needs will be different from a family of 4. If your job is stable, you may need less compared to someone who works freelance or owns a business with uncertain income. The goal is to build a fund that makes you feel secure no matter what your circumstances are. This personal tailoring makes the fund truly useful instead of just following generic rules. Building this fund is not just about money, it is about mindset. Every time you put money aside, you are telling yourself that you value security and long-term stability over short-term pleasures. You are building discipline, patience, and foresight. These qualities will serve you in every part of your financial journey, from saving to investing to growing wealth. Your emergency fund becomes proof that you can take control of your life and make wise choices even when temptations are all around you. If you ever feel discouraged, remember that even small deposits make a big difference over time. Imagine saving just $5 a day. In a year, that's more than $1,800. In 5 years, it's over $9,000. Small daily choices add up to life-changing results. And your emergency fund is living proof of this principle. Do not underestimate the power of starting small. The earlier you start, the more stability you create for yourself and your family. It is also important to celebrate your progress along the way. Each milestone you hit shows that you are building resilience and independence. Reward yourself in small, non-financial ways, like acknowledging your discipline, sharing your success with someone supportive, or simply taking pride in knowing that you are doing something most people put off. That feeling of accomplishment will fuel your desire to keep going. Over time, as your emergency fund grows, you will notice a shift in how you see money. Instead of constantly worrying about what might go wrong, you carry a sense of calm because you know you are prepared. Stress decreases, confidence increases, and decisions become easier because you are no longer operating out of fear. This freedom is priceless, and it is something you give yourself through consistent action and dedication. Think of your emergency fund as the foundation of your financial house. Without it, any setback can cause everything else to crumble. With it, you have a stable base that allows you to take bigger steps toward wealth, such as investing, starting a business, or buying a home. It protects everything you are working for and ensures that your journey toward financial freedom is not derailed by life's unexpected turns. So, start today. Open that savings account, set your first target, and make your first deposit, no matter how small. Stay consistent, stay disciplined, and stay focused. The future is uncertain, but your preparation makes all the difference. An emergency fund is not just money. It is your shield, your safety, and your peace of mind. By building it, you are protecting your future and giving yourself the chance to move forward in life with strength and security. This decision can change everything for you, and it begins the moment you decide to take action. Chapter 5. Increase your income by learning valuable new skills. The fastest way to change your financial future is to raise your value, and the most powerful way to raise your value is by learning new skills. When you improve what you can do, you increase what you can earn. Your income will always be connected to the value you bring to others, and the marketplace rewards those who are capable, reliable, and skilled. The mistake many people make is believing that their current knowledge is enough, but the world is changing every single day. New industries rise, old industries fade, and the people who keep growing are the ones who keep winning. If you want to move beyond surviving and step into a life of security and opportunity, you must commit to developing skills that make you stand out. Start by looking at your strengths and weaknesses with honesty. Ask yourself what skills are in demand today and what gaps you need to close to become more competitive. Maybe you are good at communication but lack technical knowledge. Maybe you have strong hands-on abilities but need to improve digital literacy. Whatever the case, identifying these areas gives you a clear path to follow. The key is to choose skills that open doors to better opportunities, whether in your current job or in entirely new fields. In today's world, digital skills are among the most valuable. Learning how to use software, analyze data, design websites, manage social media, or understand coding can instantly raise your worth in almost any industry. Companies everywhere are searching for people who can handle technology with confidence. Even if you are not aiming for a career in tech, having these abilities gives you an advantage because almost every business now depends on digital tools. By investing a few hours each week into online courses, tutorials, or certifications, you can quickly acquire knowledge that increases your income potential. But it is not just about digital skills. Financial literacy itself is a skill that can change your entire future. When you know how to budget, invest, and manage debt, you protect the money you already earn and make smarter decisions that grow it over time. Many people lose wealth not because they lack income, but because they lack the skills to manage it wisely. By studying personal finance, you give yourself control over every dollar, and that control compounds into wealth. Another valuable path is improving communication skills. Being able to speak clearly, write effectively, and express ideas with confidence can set you apart instantly. Employers pay more for people who can lead meetings, close sales, handle clients, and inspire teams. Strong communication creates leadership, and leadership creates higher income opportunities. You can practice this by reading, writing daily, joining groups, or even recording yourself to refine how you present ideas. The more you practice, the more natural it becomes, and the more influence you gain. Do not ignore practical trade skills either. Carpentry, plumbing, electrical work, and similar abilities are always in demand, and people who master them often earn far above average incomes. If you enjoy working with your hands, learning a trade can give you independence, stability, and the chance to run your own business. These are skills that never lose value because people will always need them. The important thing to remember is that learning does not require a huge financial investment. Free resources exist everywhere. YouTube, podcasts, blogs, and free courses offer endless opportunities to learn at no cost. Public libraries carry books that can change your financial life for free. Affordable platforms provide professional-level training for a fraction of what traditional schools charge. The real barrier is not money, it is commitment. If you dedicate even 1 hour a day to developing a skill, in a year you will be ahead of almost everyone who chooses to remain stagnant. Once you start learning, apply what you discover immediately. Knowledge without action fades quickly, but knowledge put into practice sticks forever. If you learn about digital marketing, try promoting a small project online. If you study finance, begin by organizing your own budget. If you develop a trade skill, practice on small jobs before moving to larger ones. This hands-on approach transforms theory into ability, and ability is what creates income. Along the way, track your progress. Set milestones for each skill you aim to master. For example, if you are learning a programming language, commit to completing a project within 3 months. If you are improving your writing, set a goal of producing a certain number of articles or reports. Tracking your achievements keeps you motivated and shows you how far you have come, which pushes you to keep moving forward. Building skills also requires patience. Growth does not happen overnight, but every step compounds into something bigger. Many people give up too soon because they expect instant results, but real improvement is gradual. Remember, the goal is not perfection, it is progress. Every new thing you learn makes you more valuable, and every skill you add multiplies your opportunities. Another way to accelerate your growth is by surrounding yourself with people who already have the skills you want. Join communities, attend workshops, and seek mentors. Learning from others shortens the time it takes to develop mastery because you gain wisdom from their experiences and avoid mistakes they already made. People who challenge you and push you higher will accelerate your journey far faster than trying to grow alone. It is also important to link your new skills to your income goals. Ask yourself how this ability can translate into higher earnings. Can it get you promoted at your current job? Can it allow you to freelance on the side? Can it help you start a small business? Skills must connect to opportunities, and when you pair them with strategy, they become powerful tools to grow your wealth. As you build, never settle for just one skill. Diversify your abilities so you are adaptable no matter how the world changes. Having multiple skills creates resilience. If one door closes, you have many others waiting to open. This adaptability ensures that no matter what happens in the economy, you can adjust and continue to thrive. The discipline of learning also develops qualities that go beyond money. It teaches patience, humility, problem-solving, and resilience. These qualities are just as valuable as the skill itself, because they strengthen your character. Employers, clients, and business partners notice when someone carries discipline and focus, and they are willing to pay more for that level of reliability. When you commit to learning valuable new skills, you are not just preparing for a better job, you are preparing for a better life. You gain independence because your future no longer depends only on your current circumstances. You gain confidence because you know you can adapt. You gain opportunity because every new skill creates a path you did not have before. This is the essence of building wealth from zero, using what you have now to create more for tomorrow. So make the decision today. Pick one skill that excites you and start learning. Dedicate yourself to the process daily. Apply it immediately and stay patient with your progress. Each day of effort is a deposit into your future income, and each skill mastered is a key that unlocks new doors. The path to higher income is not luck, it is growth, and that growth begins with your choice to learn. By increasing your skills, you increase your worth, and when your worth rises, your income follows. This is how you move from where you are now to the life you want, step by step, skill by skill, until wealth becomes your reality. Chapter 6. Invest early in simple assets that grow steadily. The sooner you begin investing your money, the sooner you give yourself the chance to experience real growth that compounds over time and works quietly in the background while you focus on building your life. Wealth is not created only by how much you earn, but by how wisely and how early you put your money to work. Many people postpone investing because they believe they need a large amount of capital, but the truth is that small, steady contributions can turn into something powerful when given enough years to grow. What matters most is not chasing complicated opportunities, but choosing simple assets that are proven to rise steadily and consistently when held with discipline. Investing early gives you one of the most valuable forces in personal finance: time. Time is what allows compound growth to work in your favor. Compound growth is the process where the money you invest earns returns, and then those returns also begin to earn more returns. This cycle continues year after year, multiplying your wealth without requiring you to constantly add massive amounts of cash. Even a modest investment made early in life can outpace a much larger investment made later, simply because it had more years to compound. This is why delaying investing is one of the costliest mistakes you can make. The first step is to remove the fear and complexity that often surrounds investing. You do not need to be an expert in markets or predict every movement. What you need is a clear, simple plan that focuses on stable, long-term growth. Start with basic options such as index funds, exchange-traded funds, or retirement accounts. These allow you to invest in a wide variety of companies at once, spreading risk and giving you exposure to the overall growth of the economy. They do not require daily monitoring, and they remove the pressure of trying to outsmart professional traders. Over decades, they have consistently produced returns that beat most attempts at active trading. For those who want to keep it even simpler, consider setting up automatic contributions that move money directly into your chosen investments each month. Automation takes away the temptation to skip or delay, and it ensures you are steadily building your wealth without relying on willpower alone. This habit not only keeps you consistent, but also teaches you to live on the income you actually have left after investing, which strengthens your financial discipline. Another powerful option is contributing to retirement accounts, such as a pension or 401k, if your workplace offers one. These accounts often come with benefits like tax advantages or employer matching contributions, which means you receive free money simply by participating. If your employer matches a percentage of what you contribute, failing to take advantage of it is leaving money on the table. Over the years, those contributions can grow into a substantial safety net that provides security for your later life. If retirement accounts are not available, you can still build wealth with simple personal investment accounts. The important principle is to begin now and stick to assets that rise steadily over long periods. The stock market, when viewed daily, can look unpredictable, but when viewed over decades, it shows a consistent upward trend. This means you must train yourself to think long-term and avoid being shaken by short-term drops. Every decline is temporary, and those who stay invested through ups and downs are the ones who benefit from the recovery that always follows. Another asset worth considering is real estate. Owning property has historically been a reliable way to build wealth, provided you approach it carefully. Property values tend to rise over long periods, and rental income can provide ongoing cash flow. For beginners, this might feel out of reach, but even starting with a small piece of property or a real estate investment trust can give you exposure to the benefits of real estate growth without requiring millions in capital. Investing does not mean chasing quick profits or gambling on risky trends. Too many people are drawn to schemes that promise fast returns, only to lose their hard-earned money. Instead, true investing is about patience, discipline, and trusting the process of steady growth. It is about understanding that wealth is built brick by brick, not overnight. The richest individuals in the world did not get there by guessing the market, but by putting their money into assets that they trusted would grow and leaving it there long enough for the results to show. When you invest early in simple assets, you also gain peace of mind. Instead of worrying about how you will afford the future, you know that your money is quietly working for you. This security reduces stress and allows you to focus on improving your life in other ways. It shifts your mindset from short-term survival to long-term stability. That shift alone changes how you view every financial decision, because you begin to act with the future in mind. To succeed, set a clear percentage of your income to invest each month, no matter how small it seems at first. Even 5 or 10%, if done consistently, can transform into significant wealth over time. As your income grows, increase the percentage. Treat investing as non-negotiable, just like paying your bills. This approach ensures you always make progress, even when life feels uncertain. It is also important to continue learning as you go. While simple investments are the foundation, expanding your knowledge about different asset classes helps you make better choices. Read books, listen to experts, and pay attention to how markets operate. You do not need to become a professional, but having a basic understanding strengthens your confidence and helps you avoid costly mistakes. Another lesson is to keep your emotions under control. Fear and greed are the biggest enemies of investors. When markets fall, fear pushes people to sell at the worst possible time. When markets rise quickly, greed pushes people to buy more than they can afford or chase risky trends. Both behaviors destroy wealth. Train yourself to stay calm. Remember your long-term plan and trust the steady growth of your chosen assets. The discipline of controlling your emotions is just as important as choosing the right investment. In addition, protect your investments by avoiding unnecessary debt. There is little value in growing assets if you are weighed down by high-interest payments that erase your progress. Before putting large amounts into investing, ensure your basic financial foundation is strong. Manageable expenses, emergency savings, and controlled debt. Once that foundation is set, investing becomes far more effective because the growth is not being cancelled out by money leaking away. Think of investing early as planting a tree. The best time to plant was years ago, but the second best time is right now. Every day you delay is a day you lose the power of compounding. By acting today, you give yourself the advantage that most people miss. Years from now, you will look back and thank yourself for starting when you did, even if it felt small at the time. Finally, remember that investing is not just about money. It is about freedom. It gives you the freedom to make choices without being controlled by financial stress. It gives you the ability to support your family, pursue your passions, and live with dignity in the future. That kind of freedom is worth far more than any temporary sacrifice you make today to invest. So take the first step now. Decide how much you can set aside. Choose a simple asset that has proven steady growth, and commit to staying the course. Do not wait for the perfect moment, because the perfect moment is today. Your future wealth depends not on luck, but on the discipline of investing early and letting time work in your favor. Every contribution you make is a building block toward a life of stability, independence, and abundance, and the earlier you begin, the stronger that life will be. Chapter 7. Pay off all debts to gain financial freedom faster. Debt is the greatest weight holding people back from financial freedom, and the moment you decide to eliminate it, you begin moving toward a life of control, clarity, and peace. Every dollar you owe is a dollar that steals your future, because instead of building your wealth, you are building someone else's. Paying off debt is not just about numbers on a balance sheet. It is about reclaiming your independence and freeing yourself from the constant pressure of obligations that drain your energy and limit your choices. If you truly want to accelerate your journey to wealth, you must make the elimination of debt a priority and treat it as one of the most important financial decisions of your life. The first step is to face your debts directly. Many people avoid looking at their balances because it feels overwhelming, but ignoring them only makes the problem grow larger. Write down every debt you owe, from the smallest credit card balance to the largest loan. Include the interest rates, minimum payments, and total amounts. Seeing the full picture may feel uncomfortable, but it is the foundation for taking control. Once you know exactly what you are dealing with, you can create a strategy to tackle it piece by piece instead of letting it control you. One of the most effective methods is to focus on either the debt with the highest interest rate or the debt with the smallest balance. If you choose the highest interest first, you save the most money over time because you stop paying unnecessary charges. If you choose the smallest balance first, you gain quick wins that boost your motivation and confidence. Whichever method you select, the goal is to stay consistent and never lose momentum. Momentum is the true secret to becoming debt-free, because progress fuels more progress. Reducing debt also requires cutting off the habits that caused it in the first place. If you continue using credit cards recklessly or taking on loans for things you do not need, you will never escape the cycle. Commit to using cash or debit for purchases until your debts are cleared. Learn to delay gratification and separate wants from needs. Each time you resist spending money you do not have, you are taking back control from lenders who profit from your lack of discipline. Another strategy is to increase the money you put toward debt by finding extra income. Whether through overtime, freelancing, side jobs, or selling unused items, every additional dollar should be directed toward your balances. Too often, people waste extra income on short-term pleasures, but the fastest way to gain freedom is to throw as much as possible at your debts. Imagine the relief of waking up one day with 0 monthly payments hanging over you. That relief is worth more than any temporary luxury. As you pay down your balances, keep track of your progress. Mark milestones when a credit card is cleared or a loan is paid off. Celebrate those moments, not by spending more, but by recognizing how much stronger you are becoming. Each milestone proves that your plan is working, and it keeps your focus sharp. The satisfaction of watching your balances shrink is a powerful motivator to keep pushing forward. It is also crucial to avoid taking on new debts while you are paying off old ones. Too many people fall into the trap of paying off a card only to charge it up again. Break the cycle completely by committing to living within your means. Build habits that make debt unnecessary, such as saving for emergencies, budgeting carefully, and planning ahead for big expenses. By removing the need to borrow, you guarantee that once you become debt-free, you will never return to the same situation again. Paying off debt has benefits that extend far beyond finances. It reduces stress, improves relationships, and gives you more mental clarity. Money problems are one of the biggest causes of worry and conflict in life. But when you are free from those burdens, you regain your peace of mind. You can make decisions based on your goals instead of desperation, and that shift changes how you live every single day. Debt freedom also allows you to redirect money toward building wealth. The payments you once sent to lenders can now be invested, saved, or used to improve your life in meaningful ways. Instead of throwing money away on interest, you begin putting it into assets that work for you. This is the true turning point when you move from financial survival to financial growth. Discipline is the core of this process. Paying off debt requires sacrifices, but those sacrifices are temporary compared to the lifelong freedom you gain. Skip unnecessary purchases, downsize where you can, and focus relentlessly on the bigger picture. Each sacrifice you make today shortens the time until you are free. Think of every payment not as a loss but as an investment in your independence. Surround yourself with encouragement and accountability. Share your goals with someone you trust, or join communities of people who are also paying off debt. Being around others on the same journey helps you stay focused and prevents discouragement when progress feels slow. Support creates strength, and strength helps you keep going when temptation arises. As you near the end of your debts, remind yourself of the lessons you have learned. The discipline, patience, and awareness you build during this process are tools you will carry into every future financial decision. You will know how to live within your means, how to prioritize long-term goals over short-term pleasures, and how to value freedom above material excess. These lessons are priceless, and they are the foundation of lasting wealth. Once you make that final payment, the sense of relief and power is indescribable. You no longer owe anyone, and your income is fully yours to direct. That is financial freedom, and it accelerates your path to success in ways you cannot imagine while carrying debt. Instead of being controlled by your past, you are free to build your future with strength, clarity, and confidence. So make the choice today. Face your debts, create a plan, and attack them with everything you can. Every payment brings you closer to independence. Every sacrifice builds discipline. Every step takes you further from financial chains and closer to financial freedom. Pay off your debts as fast as possible, because the life waiting for you on the other side is richer, freer, and more fulfilling than anything you have experienced before. Chapter 8. Develop daily saving habits that strengthen discipline. Every great transformation begins not with a giant leap, but with small, consistent steps. And when it comes to money, those small steps are daily saving habits that build lasting strength. Too many people imagine that saving is only about big gestures, cutting off large expenses, making major sacrifices, or waiting for a sudden increase in income. But the truth is, financial discipline is born in the smallest actions you repeat every day without fail. When you teach yourself to save daily, you reprogram your thinking, you prove to yourself that you are in control, and you set the foundation for bigger financial wins. Saving each day is not about the amount, it is about the discipline, and that discipline eventually becomes a powerful force that spills into every other area of your life. Imagine someone who puts aside just a small amount each morning. At first, it may feel insignificant, like it could never make a difference. But as days become weeks, weeks become months, and months become years, the small deposits create a visible cushion of security. What's more important than the money itself is the mindset that develops. Daily saving habits train you to prioritize your future, to delay gratification, and to respect every single unit of currency you touch. Without even realizing it, you begin to think twice before wasting money, and you learn to stretch your resources more wisely. This shift does not happen overnight, but it happens steadily, and that consistency is what creates transformation. One of the most powerful aspects of daily saving is how it reshapes your identity. When you start telling yourself, "I am a person who saves every single day," you anchor your financial discipline to your sense of self. It becomes less about what you do and more about who you are. That's why habits stick, because they stop feeling like a chore and start becoming part of your daily rhythm. Over time, you don't even need to think about it, because the decision is already made. Saving is just what you do, even if it's a small amount like the cost of a cup of tea or a snack. The act itself reinforces your discipline, and when you look back months later, you realize those tiny amounts multiplied into something much larger than you expected. This kind of habit also protects you against impulsive behavior. Everyone has moments of weakness where they are tempted to spend on something unnecessary. But if you already saved that day, you've made a win before the temptation even showed up. That one small act becomes your shield, reminding you that you have a bigger plan, and that plan matters more than a short-lived desire. Many people underestimate how daily saving builds confidence. Knowing you have control over your habits gives you the belief that you can handle larger financial challenges, whether it's paying off debt, growing investments, or building long-term wealth. It all begins with the discipline of today. Think of daily saving as planting seeds. Each day's contribution is like dropping another seed into the ground. On its own, one seed seems insignificant, but with time and care, it sprouts. And as you continue planting more seeds day after day, you eventually create a garden. The beauty is that these seeds don't only grow money, they grow character. They grow your patience, your consistency, and your vision for the future. That's why people who practice daily saving often become more disciplined in other parts of life, whether it's health, learning, or time management. Discipline in one area naturally strengthens others. One practical way to strengthen this habit is to automate it. Technology allows us to move money into savings without even thinking about it. If you can set your account to transfer a fixed amount each day, you eliminate excuses and ensure the habit happens consistently. But if automation is not possible, even setting a daily reminder to move a small amount manually can make a huge difference. What matters is not how convenient it feels at the start, but how committed you are to making it happen. Over time, the action becomes so normal that it feels strange not to save. That's when you know the habit has truly taken root. Another key benefit of daily saving is how it keeps your goals alive in your mind. When you put away money each day, you are reminding yourself of why you are doing it. Maybe it's for security, maybe it's for freedom, maybe it's for a dream you want to achieve. Whatever the reason, saving daily keeps that reason at the front of your thoughts. You are no longer passively hoping for a better future, you are actively working toward it every single day. That constant alignment between your actions and your goals is one of the most powerful forces for success. Daily saving habits also teach you the art of living below your means. Instead of waiting until the end of the month to see what's left, you prioritize saving first and adjust your spending afterward. This simple reversal changes everything. It ensures that your money works for you instead of being controlled by impulsive choices. People who master this habit rarely feel stressed about unexpected expenses because they know they are always building a cushion, even if slowly. It gives you peace of mind, and peace of mind is priceless. The truth is, most people overestimate what they can do in a day, but underestimate what they can do in a year. By saving daily, you harness the power of accumulation. The small decisions you make today ripple into massive results later. That's why the discipline of daily saving is so transformative. It doesn't rely on luck, timing, or sudden windfalls. It relies only on your ability to stay consistent, and consistency is something everyone can control. If you want to strengthen this habit, start by making it visible. Create a physical jar where you drop coins or bills daily, or use an app that tracks your progress. Watching your savings grow, even if slowly, reinforces the habit and gives you motivation to continue. The visual proof of your discipline creates pride and excitement, and that emotional connection makes the habit stick. You stop asking, "Does this little bit really matter?" and start saying, "Look what I've built already." In the end, daily saving habits are not just about money. They are about shaping the person you become. They remind you that you have the power to control your future through simple, consistent actions. They remind you that wealth is not created overnight, but built patiently with discipline and vision. And they remind you that no matter your current situation, you can always take a step forward today. By committing to save something, anything each day, you are telling your future self, "I care about you, I'm building for you, and I will not let you down." That message, repeated daily through action, is what creates lasting financial strength. Chapter 9. Use a strict budget to guide your monthly spending. The fastest way to take control of your money is to give every single dollar a clear purpose, and that is exactly what a strict budget allows you to do. Without a budget, money slips through your fingers silently, leaving you confused at the end of each month, wondering where it all went. With a budget, nothing is left to chance, and you finally gain the power to direct your income with intention. A strict budget is not about restriction. It's about clarity. It ensures you know exactly what comes in, what goes out, and where adjustments are needed. This structure gives you peace of mind because you are no longer reacting to your financial situation, you are leading it. Many people resist budgeting because they believe it will make their life harder, but the opposite is true. Living without a budget is like driving in the dark without headlights. You may move forward, but you have no idea what obstacles lie ahead. A strict budget shines a light on your entire financial picture. It shows you where you're overspending, where you can cut back, and where you can allocate more toward your goals. Suddenly the fog clears, and your money habits make sense. You stop feeling surprised by bills, and you stop depending on luck or hope to cover expenses. Instead, you operate with control and predictability. One of the most powerful parts of using a strict budget is how it transforms your decision-making. When you have a clear spending plan, you don't have to wrestle with constant choices about whether or not you can afford something. The budget already answered that question for you. This removes stress and prevents emotional spending because you now have a framework that guides your actions. You no longer wonder if you can afford dinner out or that new gadget. You know instantly whether it fits within the limits you set. This clarity saves mental energy and builds your discipline over time. A strict budget also makes you more intentional about your priorities. It forces you to ask yourself what truly matters and to align your money with those values. Instead of blindly spending on things that bring little long-term satisfaction, you start directing more toward what brings real progress, whether it's paying down debt, saving for emergencies, or investing for growth. The budget works as a mirror, reflecting your values back to you. If you notice that too much of your money is going toward wasteful areas, the budget reveals it instantly, giving you the chance to make meaningful changes. Sticking to a budget also strengthens your ability to delay gratification. You begin to see that saying no to small impulses today allows you to say yes to bigger dreams tomorrow. Every time you follow the plan instead of giving in to temporary wants, you are building financial muscle. That discipline accumulates, and soon you find that you don't even miss the unnecessary spending because the sense of control feels better than the short-term pleasure. The strictness of the budget is not about punishing yourself, it's about training yourself to prioritize long-term freedom over short-lived indulgence. What makes a strict budget so effective is that it eliminates guesswork. Too often, people try to budget in their head, thinking they know roughly how much they spend. But without writing it down and tracking it carefully, the mind always underestimates expenses. A proper budget puts the truth in front of you, with no room for denial. You see every category clearly, and you can't ignore the numbers. This honesty is powerful because it forces you to confront reality and take responsibility. From there you can make better choices and stop repeating costly mistakes. The strictness of a budget also builds consistency. Month after month, you create a rhythm that becomes second nature. Just like brushing your teeth or exercising, it turns into a routine you follow automatically. At first, it might feel uncomfortable to track every dollar, but the more you practice, the more natural it becomes. Eventually, you will feel uneasy when you don't track your spending, because the discipline has become part of who you are. That's the level of commitment that leads to lasting financial success. A strict budget also prepares you for the unexpected. Life will always bring surprises. Medical expenses, home repairs, or sudden opportunities. Without a budget, these surprises throw your entire financial life into chaos. With a budget, you already have categories and plans that make room for them. You can adjust without panic because you've built flexibility into your structure. This resilience is one of the greatest benefits of budgeting. You are not blindsided by life's challenges. You are equipped to handle them calmly. The process of creating a strict budget doesn't need to be complicated. Start with your income, then list every single expense you have. Break them down into categories: essentials like housing, food, transportation, and utilities, then goals like savings and debt repayment, and finally non-essentials like entertainment. Assign specific amounts to each and make sure the totals never exceed your income. If they do, cut back on non-essentials until the balance is right. This exercise might feel challenging at first, but it gives you a clear view of reality. Once the plan is in place, follow it with discipline and adjust as needed each month. One of the greatest advantages of using a strict budget is how it speeds up progress toward your goals. Without a plan, extra money slips away on things that don't matter. With a plan, you can direct those dollars toward milestones that bring you closer to freedom. Whether it's paying off a loan, saving for a big purchase, or building an investment account, the budget makes progress measurable. You can look back month after month and see exactly how far you've come, and that visible progress keeps you motivated to continue. Living by a strict budget also strengthens your sense of gratitude. When you track your spending, you become more aware of what you already have. You stop taking small things for granted and start appreciating the value of each expense. This awareness reduces the constant desire for more and helps you feel content with less. Ironically, strict budgeting often leads to greater satisfaction because you no longer chase things blindly. You make decisions intentionally, and intentional living feels richer than uncontrolled spending ever could. Over time, the discipline of budgeting shapes your identity just as daily saving habits do. You stop seeing yourself as someone who struggles with money and start identifying as someone who is in control, deliberate, and strategic. This shift in identity is powerful because it influences how you behave in every financial situation. Even when temptations arise, your new identity reminds you, you are someone who follows a plan, who lives with discipline, and who values the future over the fleeting moment. In the end, using a strict budget is not about restriction, it's about empowerment. It gives you the ability to say yes to the things that matter most, while confidently saying no to the distractions that drain your progress. It builds consistency, strengthens discipline, and provides peace of mind. Most importantly, it keeps you in the driver's seat of your financial journey. Every month you follow your budget is another month you take one step closer to freedom, security, and the life you want. Chapter 10. Choose long-term growth over short-term pleasures. The real path to building lasting wealth begins when you make the decision to value long-term growth over short-term pleasures, because every choice you make today shapes the life you live tomorrow. Most people stay trapped financially, not because they don't earn enough, but because they constantly trade their future for temporary satisfaction. It may feel good in the moment to buy what you want instantly, to upgrade every time a new gadget is released, or to spend freely on things that bring immediate excitement, but those choices leave you empty later, with no foundation to stand on. When you shift your perspective and decide that long-term growth matters more than instant pleasure, you unlock the discipline that separates those who struggle forever from those who create freedom for themselves and their families. Choosing long-term growth means being willing to sacrifice comfort now so you can enjoy greater comfort later. It's about delaying gratification with the knowledge that what you plant today multiplies into something far greater over time. The truth is that wealth never comes from chasing quick thrills. It comes from small, consistent actions repeated daily with patience. A person who saves and invests modestly each month will be wealthier than someone who constantly spends large amounts on passing desires. The discipline to wait, to invest in growth, and to think ahead is what transforms ordinary lives into extraordinary ones. When you decide to focus on growth instead of short-term pleasure, you start looking at every dollar differently. Each dollar becomes a seed with the potential to grow into something larger if you give it time and direction. Instead of wasting it on fast food, impulsive shopping, or entertainment that vanishes quickly, you channel it into savings, investments, or skill building that continues to pay you back. Over time, those decisions compound, creating wealth that brings lasting peace of mind and security. This shift requires maturity and self-control, but it is one of the most powerful changes you can make in your financial journey. Short-term pleasures are tempting because they offer instant dopamine, while long-term growth requires patience. Yet, the people who win financially are those who train themselves to resist that temptation. It's not about denying yourself forever, but about creating balance where your bigger goals take priority over your smaller cravings. You can still enjoy life, but you enjoy it with awareness, knowing when to say yes and when to walk away. This conscious choice makes your progress steady and sustainable. Every time you choose growth over pleasure, you are strengthening your discipline, and discipline builds success. A practical way to embrace long-term growth is to set clear goals and measure every decision against them. If your goal is to build an investment portfolio, then every unnecessary purchase takes you one step further from it. If your goal is to retire early, then constant spending delays that freedom. Keeping your goals visible and connected to your daily actions helps you resist distractions. For example, instead of buying expensive shoes that lose value immediately, you might invest in shares of a company that grows in value over the years. That choice may not give you excitement in the moment, but it gives you financial security for decades. Another important part of choosing growth is learning to enjoy the process of building. Many people fail because they only focus on the end result, but true success comes from embracing the daily habits that move you closer to your vision. When you enjoy saving, when you take pride in investing, when you feel good about resisting unnecessary spending, you no longer see it as sacrifice, you see it as progress. That mindset shift allows you to stay committed for years, because the journey itself becomes fulfilling. You start to feel joy not from consuming, but from knowing you are building something greater. Long-term growth also demands that you change your environment. If you spend time with people who chase short-term pleasure, you will be pressured to do the same. But if you surround yourself with those who value discipline, planning, and growth, you absorb their habits. Being in the right circle reminds you that delaying gratification is not strange, it's the normal path for those who want more out of life. This kind of support system strengthens your resolve and keeps you from slipping back into old patterns. Growth becomes easier when the people around you share the same values. It's important to understand that choosing long-term growth is not about living a life of deprivation. It is about creating freedom. When you constantly chase short-term pleasures, you remain dependent on the next paycheck, always stressed about bills and never secure. But when you focus on growth, you build assets that give you options. You gain the freedom to choose how you live, to retire when you want, to support your family, and to pursue passions without financial stress. That freedom is far more rewarding than the fleeting thrill of spending on things that quickly lose their value. This principle applies not only to money, but also to habits and personal development. For example, spending time scrolling endlessly through distractions may give temporary comfort, but reading books, learning skills, and improving yourself brings growth that pays dividends for the rest of your life. Eating unhealthy food may satisfy cravings today, but caring for your health allows you to live stronger and longer. Every area of life has the same choice: short-term comfort or long-term benefit. The more often you choose growth, the more your life transforms in every dimension. One way to stay committed to long-term growth is to visualize the life you want in the future. Imagine the peace of being debt-free, the security of having investments, the relief of knowing your children are provided for, and the joy of living without financial chains. Compare that vision to the fleeting pleasure of buying something unnecessary today. The contrast makes the decision easier. Each time you resist a short-term distraction, you are not losing, you are gaining the future you want. That perspective makes discipline feel rewarding instead of painful. There will be moments when temptation feels overwhelming. In those times, remind yourself that long-term success is built in silence, with consistent choices that may not be visible immediately, but accumulate into something powerful. The people who seem successful today are often those who quietly chose growth for years, while others indulged. Their results look impressive now, but they were built on thousands of small decisions to prioritize the future. You can achieve the same if you stay committed, even when it feels slow. Patience is the price of freedom. The truth is, choosing long-term growth over short-term pleasure is one of the hardest but most rewarding disciplines you can develop. It requires self-awareness, planning, and daily practice, but it also creates a life of independence, security, and fulfillment. The pleasures you give up today are nothing compared to the freedom you gain tomorrow. Your financial journey is a reflection of your daily decisions, and each choice is an opportunity to prove to yourself that your future matters more than a passing desire. If you want to build wealth from zero, this principle is non-negotiable. Growth is not immediate, but it is certain when you remain consistent. Focus on your bigger goals, stay disciplined with your spending, invest in your future, and remind yourself that lasting wealth is built through patience and persistence. When you live by this mindset, you no longer feel trapped by money, You take control of it, and that control gives you the power to design the life you deserve, a life that is not built on fleeting pleasures, but on lasting freedom. Chapter 11. Surround yourself with people who inspire financial success. The fastest way to transform your financial future is to be intentional about the people you allow into your life, because the company you keep will either pull you forward or hold you back. Human beings naturally absorb the habits, attitudes, and beliefs of those around them, and this is especially true when it comes to money. If you spend your time with people who constantly complain, live beyond their means, and chase short-term pleasures, it becomes almost impossible to stay disciplined on your own path. But if you surround yourself with people who are focused on growth, who manage their money with care, and who set high financial standards for themselves, their influence will push you to rise higher. Being in the presence of people who inspire financial success reminds you that better is possible. It keeps you from settling for average when you can achieve more. Inspiration is contagious, and when you see someone you know building wealth through smart habits, it challenges you to do the same. You start asking yourself bigger questions, thinking longer term, and making decisions that reflect ambition rather than fear. Their example becomes a mirror that reflects what you are capable of, and soon you stop making excuses and start making progress. It's important to realize that the wrong environment can quietly destroy your chances at financial growth. If everyone around you is spending recklessly, you will feel pressured to do the same. If the people closest to you constantly talk negatively about money, you will absorb those beliefs without noticing. You might begin to think that financial freedom is impossible or that wealth is only for the lucky. These limiting beliefs are not born inside you, they are inherited from the people you spend the most time with. That is why choosing your circle is one of the most powerful financial decisions you will ever make. Surrounding yourself with people who inspire success does not mean you must abandon everyone in your current life. It means being intentional about the energy you allow to influence you. You can limit your exposure to negative voices and increase the time you spend with those who lift you up. Even if you don't personally know wealthy or financially disciplined people yet, you can create that environment through books, podcasts, videos, and communities online. Learning from people who have walked the path you want to follow is as powerful as knowing them in person. Knowledge and inspiration travel through words and ideas, not just through direct relationships. The right people will also hold you accountable. They won't let you justify poor financial choices or drift aimlessly without goals. Instead, they will challenge you to think about your actions, to stick to your plans, and to take responsibility for your results. Accountability may feel uncomfortable, but it is the pressure that turns inconsistency into progress. When you know the people around you expect you to do better, you rise to that expectation. Their belief in you strengthens your own, and soon you begin to expect more of yourself. Another powerful benefit of surrounding yourself with people who inspire financial success is the knowledge you gain. Everyone carries experiences and lessons that can open your eyes to new strategies and better decisions. A single conversation with someone who understands money can save you years of mistakes. They might teach you how to invest more effectively, how to negotiate better, or how to avoid traps that keep people stuck in debt. These insights are priceless, and they only come when you put yourself in the right environment. Being around successful people also helps you adopt their mindset. They don't just think differently about money, they think differently about life. They see opportunities where others see obstacles. They focus on solutions instead of excuses, and they stay disciplined when others give in to distractions. When you absorb this mindset, it shifts the way you approach everything. You stop blaming circumstances and start focusing on what you can control. This mental shift alone can change the entire direction of your financial journey. At the same time, surrounding yourself with the right people allows you to celebrate wins together. The journey to financial freedom can sometimes feel lonely, especially if most people around you don't share the same goals. But when you connect with people who value success, your victories, no matter how small, are understood and appreciated. They celebrate with you not because of jealousy, but because they genuinely want to see you win. That encouragement fuels your motivation and keeps you moving forward even when progress feels slow. This principle also requires courage, because sometimes it means stepping away from people you've known for a long time. If someone constantly drags you down, mocks your goals, or pressures you to abandon your discipline, you must protect your future by setting boundaries. This doesn't mean cutting people out with anger. It means limiting their ability to influence your choices. Your financial freedom is too important to sacrifice for the comfort of fitting in. Growth often requires outgrowing environments that no longer serve you. You will notice that when you align yourself with people who inspire success, your own standards begin to rise. Suddenly, wasting money feels out of place, procrastinating feels uncomfortable, and settling feels unacceptable. You begin to expect more from yourself because the people around you expect more. Over time, your actions start to match these higher standards naturally, and that shift changes everything. Progress feels inevitable when you live in an environment that supports it daily. The company you keep can also open doors of opportunity. People who are financially disciplined often know about investments, businesses, or projects that you might never hear of otherwise. By being in their circle, you gain access to information and chances that can accelerate your journey. Success is rarely built alone. It is often supported by networks, shared knowledge, and connections that push you forward. Choosing to be around people who are already walking the path makes it more likely that you will discover shortcuts and opportunities that align with your goals. Ultimately, the choice to surround yourself with people who inspire financial success is an act of self-respect. It means you value your future enough to protect it from negativity, distraction, and mediocrity. It means you are willing to seek out the environments that challenge you, support you, and push you to become the best version of yourself. Every time you choose to spend time with people who lift you higher, you are investing in your own growth. The journey to wealth is not just about numbers, it is about mindset, discipline, and environment. The people closest to you shape all three. That is why it is impossible to overstate the importance of this principle. Surround yourself with people who think bigger, who live with discipline, who believe in growth, and who practice financial wisdom. Their energy will become your energy, their habits will influence your habits, and their results will inspire your results. When you choose your circle wisely, you are not just changing who you spend time with, you are changing the trajectory of your life. You are building a foundation of inspiration, accountability, and opportunity that carries you forward even when challenges come. And in time, you will notice that you too have become the person who inspires others. That is the power of environment. It not only shapes you, it allows you to shape others. Chapter 12. Learn from financial mistakes and improve your decisions. The fastest way to accelerate your financial growth is to turn every mistake into a lesson that reshapes how you think, plan, and act with money. Everyone makes wrong decisions at some point, buying something impulsively, investing without proper knowledge, ignoring savings, or carrying too much debt. The difference between those who stay stuck and those who move forward is not whether they made mistakes, but whether they used those mistakes as fuel for smarter choices in the future. Failure is not the end of the road unless you refuse to learn from it. In fact, some of the most successful people you admire today built their wealth because they took the time to analyze where they went wrong and changed their behavior accordingly. When you experience a financial setback, The worst thing you can do is ignore it or blame it on bad luck. Doing so only ensures that you will repeat the same mistake again. Every dollar lost, every opportunity missed, and every poor choice holds valuable information about what not to do next time. If you step back and look closely, you will always find a clear lesson hidden inside the experience. Maybe you trusted the wrong advice, maybe you didn't do enough research, or maybe you gave in to emotion instead of logic. Whatever it is, identifying the root cause gives you the clarity to make better decisions moving forward. Learning from financial mistakes also requires humility. Pride can convince you to cover up the error, to deny it happened, or to justify it so you don't feel embarrassed. But the truth is that admitting your mistake is the first step to growth. The moment you say, "I made a bad decision, and here's what I learned from it," you turn a painful situation into a powerful teacher. Instead of running from the experience, you use it to build resilience. This shift in mindset transforms you from a victim of circumstances into the author of your next chapter. It's also important to understand that mistakes are not signs of weakness. They are inevitable stepping stones in the process of growth. Think about children learning to walk. They fall countless times, but each fall teaches them balance. The same principle applies to money. Every mistake sharpens your ability to see danger earlier, to ask better questions, and to protect your future more effectively. The only true failure is refusing to learn. If you carry the same habits that caused yesterday's problems into tomorrow, you guarantee more setbacks. But if you treat each mistake as a lesson, you move closer to mastery with every step. Improving financial decisions after mistakes also comes down to changing your process, not just your intentions. If overspending has been your weakness, set up a budget that holds you accountable. If poor investments hurt you, commit to learning the basics before putting in money again. If debt overwhelmed you, create a repayment strategy and avoid taking on new unnecessary loans. Change happens when you combine reflection with action. Simply realizing you went wrong isn't enough. You must build new systems and disciplines that prevent the same error from repeating. Another key is to detach emotion from financial decisions. Many mistakes happen because choices are made in moments of excitement, fear, or impatience. You might chase a risky investment because everyone else is doing it, or spend money you don't have because you want to feel good in the moment. Once you recognize this pattern, you can begin training yourself to pause, think, and act from logic rather than impulse. A rule as simple as wait 24 hours before making any big purchase can save you from countless mistakes. These small disciplines build the foundation for long-term stability. Surrounding yourself with knowledge also minimizes repeated errors. If you've made mistakes with money, study the principles of personal finance, read books, listen to experts, and observe how successful people make decisions. By learning from the experiences of others, you gain the wisdom to avoid traps before you fall into them. The lessons of others are shortcuts that save you time, energy, and money. And when combined with your own experiences, they give you a balanced perspective that strengthens every decision you make. Accountability is another powerful way to ensure that mistakes turn into growth. Share your goals with someone you trust, and let them know the lessons you've learned from your past. When you are open about your journey, you create an extra layer of responsibility. Having someone check in with you, ask tough questions, or challenge your decisions makes it harder to repeat the same errors. Sometimes, the simple act of knowing that someone else is watching your progress is enough to keep you disciplined when temptation arises. Patience also plays a big role in learning from financial mistakes. Many people make errors because they want results too quickly. They jump into investments without preparation or take shortcuts to speed up their progress. But true wealth is built over time with consistent effort. When you learn patience, you naturally avoid many of the traps that cause financial pain. You begin to see that it is better to move slowly in the right direction than quickly toward disaster. Mistakes often come from rushing, and improvement comes from slowing down to make deliberate choices. Another crucial lesson is forgiveness. Beating yourself up endlessly over a mistake does not change the past. It only weakens your ability to move forward. Yes, you may have lost money. Yes, you may have wasted years, but the past cannot be rewritten. Only the future can be shaped. Forgive yourself, extract the lesson, and channel your energy into rebuilding. The most successful people in history lost fortunes before they built them. What made them different was their refusal to stay stuck in regret. They turned their setbacks into stepping stones, and you can do the same. With every mistake you correct, your confidence grows. At first, you may feel uncertain about your decisions because of the errors you've made before. But as you start applying lessons and making better choices, you build trust in yourself. You begin to see that you are capable of learning, adapting, and improving. Confidence doesn't come from avoiding mistakes altogether. It comes from proving to yourself that you can rise after them. This self-trust becomes one of your most valuable assets on the path to financial freedom. In time, you will also realize that the very mistakes you once regretted are what gave you the strength to succeed. They taught you discipline, patience, and wisdom in ways that books and theories never could. Personal experience carries a depth of understanding that nothing else can replace. Instead of wishing your mistakes never happened, you may find yourself grateful for them because they shaped your growth in ways comfort never could. The true measure of financial growth is not how perfectly you manage money, but how effectively you bounce back when things go wrong. Every mistake is an opportunity to sharpen your vision, strengthen your strategy, and prove your resilience. If you choose to learn, you will never be the same person again. Each lesson makes you stronger, smarter, and more capable of building the future you want. When you decide to treat mistakes as teachers, you take control of your financial destiny. You stop fearing setbacks because you know that even in failure, you will find growth. You stop hiding from your past because you know it holds the wisdom to shape your future. And you stop doubting your potential because every mistake you've overcome is proof of your ability to rise. Chapter 13. Focus on building multiple income streams for security. The smartest move you can make for long-term stability is to stop relying on a single source of income and start building multiple streams that create real financial security. Depending on one paycheck, one business, or one client leaves you vulnerable to sudden changes you cannot control. If that one source dries up, you are left exposed and forced to scramble for survival. But when you have several streams of income, you spread the risk, strengthen your financial foundation, and give yourself room to grow without fear. Wealthy people understand this principle well. They don't rely on only one way to make money, and that is why they remain stable even when the economy shifts. Building multiple streams doesn't mean you need to create 10 businesses at once or overwhelm yourself with endless projects. It means gradually adding new ways to earn so that you're never left with only one option. Think of it like planting seeds. Some may grow quickly, others take time, but together they create a field that sustains you for years to come. Even if one crop fails, the others continue to feed you. This approach brings peace of mind because you know that your future is not hanging on a single thread. One of the easiest ways to start building multiple income streams is to look at your current skills and see how they can be used in new ways. For example, if you already have a job, ask yourself if you can use your knowledge to freelance, consult, or teach others. If you know how to write, design, or manage projects, there are people and companies willing to pay for those abilities. Turning what you already know into a side source of income is one of the fastest steps you can take toward financial independence. Another powerful stream is creating assets that earn for you without requiring your constant time. These could be investments like stocks that pay dividends, rental properties that provide monthly income, or digital products that can be sold repeatedly once created. The goal is to set up systems where money continues to flow in even while you sleep. At first, these streams might start small, but as they grow, they reduce your reliance on active work and give you more freedom to design your life the way you want. Multiple streams also protect you during uncertain times. Imagine someone who only has one job. If they get laid off, all their income disappears overnight. But a person who has a job, a rental property, some dividend income, and a side business selling online products won't face the same level of panic. Even if one stream is lost, the others provide stability until new opportunities are built. This cushion prevents financial disasters and makes recovery easier. Security is not about avoiding problems, it's about preparing so well that problems don't destroy you. Building several streams also expands your potential for growth. With just one paycheck, your income has a ceiling. You can only make what your employer allows. But when you create side ventures, investments, or passive sources of income, you add layers to your earning potential. There's no limit to how much you can build when you're not restricted to a single source. Each stream you add opens a new door, and over time, those doors lead to greater wealth and freedom. This journey also forces you to develop valuable traits like creativity, resourcefulness, and persistence. When you commit to creating new streams of income, you push yourself to think differently. You look for opportunities where others see none. You test new ideas, learn new skills, and expand your network. Even if some attempts fail, you grow in the process, and often the lessons learned from one failed attempt become the key to success in the next one. It's also important to choose streams that match your lifestyle and strengths. Not everyone should try real estate, and not everyone should build an online store. The best streams are the ones you can manage without burning out, that align with your abilities and that fit into your schedule. If you enjoy teaching, online courses or coaching may be perfect. If you love numbers and research, investments may suit you. If you are skilled in crafts, digital marketplaces can become your source. There is no single formula. What matters is building something sustainable that truly works for you. Another overlooked benefit of multiple income streams is confidence. When you know your well-being does not depend on just one paycheck, you carry yourself differently. You negotiate with strength, you make decisions with less fear, and you take bold steps without constant anxiety. This inner security is priceless because it gives you the freedom to focus on opportunities rather than survival. Financial confidence is not about being reckless. It's about knowing that you've built a safety net strong enough to catch you if things go wrong. At the same time, building multiple streams teaches patience and consistency. It's not about overnight success. It's about stacking small, steady wins over time. Your first side project may only earn a few dollars, but those few dollars prove that you can create value outside your main job. Then with time, effort, and reinvestment, that stream grows. The key is not to dismiss small beginnings, because even the largest rivers start as tiny streams. The discipline of managing multiple sources of income also strengthens your financial intelligence. You learn how to budget across different flows, track performance, and make adjustments. You begin to see which streams are worth scaling and which should be phased out. You sharpen your judgment, and over time, this makes you a wiser and more capable wealth builder. Every dollar becomes a decision, and every decision strengthens your control over your financial future. Surrounding yourself with people who already live this principle can accelerate your progress. Seek out those who have built multiple streams and learn from them. Observe how they diversify their income, how they manage risks, and how they balance their efforts. Success leaves clues, and by studying the habits of those ahead of you, you can avoid mistakes and move faster. Being in an environment where multiple streams are normal raises your own standards and expands your vision. The greatest reward of having multiple income streams is freedom. When your life is not tied to one source, you gain choices. You can decide to reduce hours at your job, pursue passion projects, or even retire earlier than most people dream of. You are not trapped in a cycle of dependence. You are free to design your lifestyle. This freedom is not about luxury. It's about control. Control over your time, your energy, and your direction in life. Every person has the ability to start building these streams, no matter where they are right now. You don't need to be rich to begin. You only need to be committed to creating something beyond your main income. Start small, stay consistent, and keep adding layers. Over the years, those layers will create a financial structure that is strong, resilient, and capable of carrying you through any storm. When you focus on building multiple income streams, you stop waiting for luck and start building certainty. You move from fear to confidence, from dependence to independence, and from limitation to abundance. Your financial life becomes stronger, not by chance, but by choice. And the sooner you begin, the sooner you will taste the peace and security that comes with knowing your future is not tied to a single thread, but supported by a foundation you built with intention. Chapter 14. Commit to lifelong learning about money and growth. The most powerful decision you can ever make for your financial future is to commit yourself to lifelong learning about money and growth, because true wealth is not built on luck, but on knowledge that compounds over time. The people who stay poor are often not lazy but uninformed, and the ones who rise above limitations are the ones who choose to keep learning even when others stop. When you make continuous education about money a permanent part of your life, you arm yourself with tools that protect you from mistakes, open doors to opportunities, and give you confidence to act when others hesitate. Money is not static, and the world around it changes every day. New technologies, industries, and financial systems are always developing, and if you ignore them, you risk falling behind. What worked for your parents or grandparents might not work for you, and what works today might not work in 10 years. That is why staying curious and updated is essential. You need to grow with the times rather than cling to outdated beliefs. By constantly feeding your mind with new knowledge, you position yourself to make better choices than those who simply guess or rely on chance. Lifelong learning about money is not only about reading financial books or taking formal courses, though those are valuable. It is about observing how money flows in the world, paying attention to trends, and asking better questions. It means learning from both success stories and failures, understanding why some people go bankrupt while others thrive in the same environment. Every lesson you pick up adds another layer of wisdom that guides your own path. Instead of being a passive participant in your financial life, you become an active student, always seeking improvement. Another key part of lifelong learning is humility. Many people make the mistake of thinking they already know enough about money, but the truth is no one ever knows everything. Even the most successful investors and entrepreneurs continue to study markets, strategies, and human behavior because they understand that complacency is dangerous. The moment you stop learning is the moment you start falling behind. Staying humble keeps you open to growth, and openness ensures you always have room to get better. A practical way to commit to this habit is to dedicate regular time to financial education, just as you might set aside time for exercise or relaxation. Set aside time to learn about money. Read books, listen to audiobooks, follow reputable financial educators, or even join communities where people discuss personal growth and wealth. These small daily or weekly habits accumulate, and over months and years, they reshape how you think and act with money. What once seemed confusing or intimidating becomes clear because you've trained your mind to understand it. Learning also expands your options. If you study how investments work, you can grow your money instead of letting it sit idle. If you learn about entrepreneurship, you can create opportunities instead of waiting for them. If you understand budgeting deeply, you can design a life that aligns with your goals instead of drifting aimlessly. Every new piece of knowledge is like adding another tool to your toolbox, giving you more ways to build the future you want. Without that learning, you are left with fewer choices and more dependence on luck. Lifelong financial learning also strengthens resilience. Markets crash, jobs disappear, and economies shift, but if you are educated, you are not easily shaken. You know how to adapt, how to manage risk, and how to recover faster. People who never learned about money often panic in hard times, but those who invested in knowledge stay calm and make rational decisions. They are able to seize opportunities when others are paralyzed by fear. This resilience comes not from chance, but from the discipline of constantly educating yourself. Another benefit of lifelong learning is the improvement of your mindset. Money is not only numbers on paper, it is deeply connected to your emotions and beliefs. Many people are limited not by what they earn, but by how they think about money. They believe they can never escape debt, never build wealth, or never deserve success. Education corrects these beliefs. The more you learn, the more you see that wealth is possible, that growth is within reach, and that discipline and knowledge can change your entire life. This shift in mindset often becomes the turning point between staying stuck and breaking free. It's also important to diversify what you learn. Don't only study one area. Explore different aspects of money and growth. Learn about saving strategies, investments, entrepreneurship, personal development, and even the psychology of habits. The broader your understanding, the more well-rounded your decisions will be. If you only focus on one area, you may miss opportunities in others. True growth comes when you connect different areas of knowledge and use them together to create a strong foundation. Applying what you learn is just as important as the learning itself. Knowledge without action changes nothing. If you read about budgeting, start practicing it. If you study investments, make small moves to put your learning into practice. If you hear about side income ideas, test one out. Every action you take reinforces your education and makes it real. Over time, your experiences become your greatest teacher, and the lessons you learn firsthand stick with you forever. Lifelong learning about money also has a ripple effect. When you improve your financial knowledge, you can share it with your family, friends, and community. You become a source of guidance, helping others avoid mistakes and build stronger futures. This not only multiplies the impact of your learning, but also strengthens your own understanding, because teaching something forces you to master it. By committing to your own education, you indirectly raise the standards of everyone around you. Finally, lifelong learning about money and growth builds purpose. Wealth is not only about having more, it's about knowing how to use it wisely, how to grow it responsibly, and how to align it with a meaningful life. Education ensures that your wealth serves you rather than enslaves you. You make conscious choices instead of impulsive ones, and those choices allow you to live with intention. When you dedicate yourself to constant growth, you use a life that is not only financially stable, but also fulfilling and impactful. The truth is, money will always be part of your life, and growth is always possible. If you choose to keep learning, you will keep rising, no matter where you start. The world belongs to those who never stop improving, those who adapt, those who stay curious, and those who refuse to settle for ignorance. Committing to lifelong learning is not a task for tomorrow. It is a responsibility for today. Each day you dedicate to growth brings you closer to freedom, closer to confidence, and closer to the life you want to build. Chapter 15. Stay consistent with small steps that build real wealth. Real wealth is not created overnight, but through consistent, focused actions that compound over time. And the most important step you can take is to commit to small daily actions that build your future. Too often, people look for quick fixes, schemes, or shortcuts, believing that a single decision can change everything. The truth is that sustainable financial growth comes from repetition, discipline, and patience. Every small deposit into your savings, every extra dollar invested, every careful choice about spending adds up, and over months and years, these small steps create results that feel almost unstoppable. Consistency matters more than intensity. One big, impulsive investment can succeed or fail, but small, steady moves build resilience and momentum. Saving a little each day, investing a fixed amount regularly, and tracking progress consistently creates habits that protect you from emotional swings and financial mistakes. These habits compound in power because they are predictable, disciplined, and repeatable. Over time, consistency turns ordinary actions into extraordinary outcomes that are far more reliable than trying to win with luck or timing. Small steps also reduce overwhelm. Many people fail to start building wealth because the process feels too large or complicated. They look at the goal of financial freedom and see an enormous mountain, then freeze. Breaking the process into manageable daily actions removes that barrier. Instead of trying to do everything at once, focus on simple, measurable tasks you can accomplish today. Even saving $5, reading one page about investing, or cutting one unnecessary expense creates forward motion. Every day adds another block to your foundation. This principle is particularly effective because it trains your discipline. Wealth is a byproduct of disciplined behavior, repeated over time. When you commit to daily action, you strengthen your self-control and build confidence in your ability to follow through. Consistency becomes a habit that extends beyond money. It influences every area of life. You start to see that the same persistence applied to skills, health, or relationships produces similar results. The power of small, consistent steps is not just in the money you accumulate, but in the character you develop. Another benefit of small, steady steps is that they allow for adaptation. Life is unpredictable, and large, aggressive moves often leave you exposed if circumstances change. A series of smaller actions provides flexibility and control. You can adjust your strategy as you learn what works, redirect resources if needed, and recover from mistakes more easily. Instead of risking everything on one major decision, you create a system that is resilient and sustainable, capable of withstanding ups and downs without derailing your long-term goals. Tracking progress is essential when taking small steps. Without measurement, it is easy to lose sight of the impact of your actions. By keeping a record of savings, investments, and spending, you can see how each small effort adds up over time. This visibility is motivating because you realize that seemingly insignificant actions are actually powerful when compounded. The knowledge that your efforts are making a difference keeps you focused and prevents discouragement when results are not immediately obvious. Consistency also helps develop financial intuition. As you repeatedly take small actions, you start to notice patterns and make smarter decisions naturally. You become aware of what expenses are unnecessary, which investments offer value, and which habits generate long-term benefits. This intuition is invaluable because it allows you to make quick, effective choices without needing to overanalyze or rely on external validation. Over time, your disciplined actions turn into instinctive, intelligent behavior that guides your wealth-building journey. The psychological effect of small, consistent steps is equally important. Every successful action reinforces your sense of control and self-efficacy. You stop feeling like financial success is something distant or unattainable and start seeing it as a direct result of your efforts. This mental shift transforms fear into confidence, hesitation into action, and hope into expectation. When you trust the process of steady effort, setbacks no longer feel devastating because you know that continued action will overcome temporary obstacles. Another advantage is that small steps reduce the temptation for impulsive decisions. By focusing on a structured, disciplined plan, you resist the urge to chase flashy opportunities or instant gratification. You begin to value the long-term payoff of steady progress over short-term pleasure. This mindset keeps you from overspending, overinvesting recklessly, or making emotional financial choices that could set you back. Consistency trains patience, and patience is a critical ingredient in building real wealth. Building real wealth through small steps also fosters creativity. As you work consistently, you begin to look for more efficient ways to save, invest, or earn. You find opportunities that others overlook because they are too focused on immediate results or shortcuts. Incremental progress gives you space to experiment, learn, and refine strategies. Each minor success reinforces your belief that you can improve and innovate, creating a cycle of continuous growth that compounds with time. It is important to set systems that automate these small steps. Automatic savings transfers, recurring investments, and scheduled reviews make consistency effortless. When actions are built into your routine, they happen naturally without relying solely on willpower. Automation ensures that even when life gets busy or distractions arise, your wealth-building process continues uninterrupted. Over time, these systems create a strong financial backbone that grows quietly and steadily, even when you are focused on other priorities. Consistency is also closely linked to accountability. Sharing your goals with a trusted friend, mentor, or financial advisor helps you stay on track. When someone else is aware of your commitments, you are more likely to follow through on daily actions. Accountability creates an added layer of discipline that reinforces the habit of consistency. Even small setbacks become learning opportunities rather than derailments, because the structure and support around you keep you moving forward. Ultimately, the journey to real wealth is built on trust in the process. Small steps may seem insignificant day by day, but they accumulate into results that are profound and life-changing. Wealth is the product of hundreds, thousands, or even tens of thousands of small actions repeated with focus and determination. By committing to consistency, you ensure that your efforts compound, your skills improve, and your mindset strengthens. Over time, the life you envisioned begins to take shape, not by chance, but by design. Every decision you make today has a ripple effect on your future. Saving a few dollars, investing in knowledge, or avoiding unnecessary expenses may feel minor in the moment, but repeated daily, these actions accumulate into a life of security, freedom, and abundance. Real wealth is not flashy or instant. It is quiet, methodical, and unyielding in its growth. The person who understands this principle takes control of their financial destiny and transforms it into reality, step by small step. Consistency is the bridge between where you are now and the financial life you desire. Every time you take a small, deliberate action, you build momentum, reinforce discipline, and create compounding results. The process is simple but powerful. You do not need to wait for perfect timing, vast resources, or extraordinary luck. You only need to keep moving forward, one step at a time, every day. That unwavering commitment, repeated without fail, is the difference between ordinary outcomes and extraordinary wealth. Chapter 16. Protect your health to maintain energy for success. Your health is the most valuable asset you have, and without it, every financial plan, business idea, and wealth-building strategy loses its power, because energy and vitality are the true currency of success. No amount of money can replace the strength, focus, and endurance that a healthy body provides. You can make the smartest investments, build multiple income streams, and save diligently, but if you neglect your physical and mental well-being, progress becomes slower, harder, and far less sustainable. Protecting your health is not optional. It is a foundational step in achieving lasting success. Energy fuels action, and action drives results. When your body is strong, well-nourished and rested, you think more clearly, make better decisions, and can endure challenges that would otherwise overwhelm you. Fatigue clouds judgment, stress erodes discipline, and poor nutrition limits creativity and problem-solving. Without the energy to execute, even the most brilliant strategies remain unrealized. Protecting your health ensures that your mind and body are aligned, giving you the stamina to follow through on your goals consistently. Daily habits form the backbone of your health, and the choices you make now will dictate the quality of your life tomorrow. Eating whole, nutrient-dense foods fuels your body for performance and recovery. Avoiding processed, sugary, and inflammatory foods reduces fatigue, prevents chronic illness, and sharpens mental clarity. Hydration is equally crucial. Water is essential for every cellular function and supports sustained energy levels throughout the day. Every meal, every glass of water, and every snack is an investment in your future capacity to perform at your best. Physical activity is another pillar of health that directly impacts your ability to succeed. Regular exercise strengthens your heart, lungs, and muscles, improves circulation, and increases energy production. It is not about extreme workouts or gym memberships. Consistent movement, walking, stretching, resistance training, or even short bursts of activity keeps your body resilient and your mind alert. Exercise also releases endorphins, reduces stress, and improves mood, all of which support clearer thinking and better decision-making in high-pressure situations. Sleep is a non-negotiable part of protecting your health. Quality rest allows your body to repair itself, consolidate memory, and restore mental energy. Chronic sleep deprivation impairs judgment, slows reaction times, and reduces creativity. Even a few nights of poor sleep can significantly impact productivity and focus. Prioritizing 7-9 hours of restful sleep each night is a deliberate action that compounds over time, giving you the strength and clarity to tackle challenges effectively. Sleep is not a luxury, it is the fuel that powers consistent high performance. Mental health is just as critical as physical health in maintaining energy for success. Stress management, emotional resilience, and mindfulness practices keep your nervous system balanced, allowing you to respond to challenges with calm and clarity rather than reactivity. Meditation, journaling, deep breathing, or simply taking quiet breaks during the day can prevent burnout and protect your decision-making capacity. The healthier your mind, the better your ability to focus on growth, spot opportunities, and remain disciplined under pressure. Preventive care is an often overlooked aspect of protecting your health. Regular checkups, screenings, and early interventions prevent small issues from becoming major problems. Taking proactive steps today avoids long-term setbacks tomorrow. Ignoring warning signs or delaying medical attention can derail your energy, productivity, and ultimately your wealth-building journey. Staying vigilant about your health ensures that you remain capable of taking action consistently. Nutrition, exercise, sleep and mental care are interconnected, and neglecting one weakens the others. For example, poor diet affects energy levels, which reduces motivation to exercise, which in turn affects sleep and mental clarity. Addressing each pillar consistently creates synergy, amplifying the benefits across every area of your life. The stronger your foundation, the easier it becomes to tackle complex challenges, sustain discipline, and maintain the stamina required for success. Building a routine that prioritizes health also strengthens discipline in other areas. The habits you cultivate to eat well, exercise regularly, and sleep consistently reinforce self-control in your financial, professional, and personal life. Every intentional choice to protect your body signals to your mind that long-term outcomes are more valuable than short-term comfort. This discipline becomes transferable, helping you resist impulsive spending, procrastination, and other behaviors that can slow progress toward wealth. Protecting your health also safeguards your ability to seize opportunities. High energy levels allow you to work longer on important projects, think strategically, and respond quickly when doors open. When you are physically and mentally drained, opportunities are missed, ideas are forgotten, and execution suffers. By maintaining strong health, you position yourself to act decisively and consistently, turning potential into tangible results. Longevity is another benefit of prioritizing health. The longer you can maintain your physical and mental vitality, the more time you have to build, grow, and enjoy the wealth you create. Protecting your health ensures that your success is sustainable, and not just a short burst that ends prematurely due to preventable illness or fatigue. Wealth without health loses its value because energy and well-being are required to enjoy, manage, and expand it effectively. Consistency is critical. Health is not maintained through occasional bursts of effort, but through daily choices. Every workout, every balanced meal, every hour of sleep, and every mindfulness practice compounds over time. These actions build resilience, enhance productivity, and create a foundation that supports long-term success. Ignoring health in the short term may feel manageable, but it inevitably limits your capacity to achieve big goals. Your body and mind are instruments of performance, and just like any instrument, they require maintenance, care, and attention. Protecting your health is a strategic decision that multiplies your ability to earn, innovate, and lead. Treat every day as an opportunity to invest in your physical and mental strength. Avoid shortcuts that compromise energy and focus, because the cost is far greater than any temporary convenience. A key mindset is to view health as a tool, not a burden. Exercise, nutrition, sleep, and mental care are not chores. They are the fuel that enables you to execute your plans, make wise decisions, and achieve your goals with maximum efficiency. The moment you start seeing health as a strategic advantage rather than an obligation, it becomes easier to prioritize it consistently. Ultimately, protecting your health is about respecting your capacity to create, sustain, and enjoy success. Energy, clarity, and resilience are what allow you to execute plans, overcome obstacles, and reach higher levels of achievement. Without these, money, skills, and knowledge are limited in their impact. Taking responsibility for your body and mind ensures that you are equipped to face challenges, capitalize on opportunities, and maintain momentum for years to come. Every choice you make today regarding your health has a direct impact on your future. The food you eat, the sleep you prioritize, the exercise you commit to, and the mental care you practice compound to determine your energy levels, focus, and ability to achieve results. Protecting your health is not separate from building wealth. It is the foundation upon which all success is built. Strong health creates strong outcomes, and strong outcomes begin with the deliberate, consistent choices you make right now. Chapter 17. Think long-term when planning your financial journey. The most important mindset that separates those who achieve lasting financial freedom from those who struggle is the ability to think long-term, because every decision you make today shapes your wealth years from now. Short-term thinking leads to impulsive spending, quick fixes, and decisions that feel good now but cost you in the future. When you commit to a long-term perspective, you begin to prioritize actions that may not have immediate gratification, but build lasting value, resilience, and security over time. Wealth is not created by luck or a single big win. It is created by consistent strategic choices that compound patiently over months and years. Long-term thinking starts with clarity about where you want to be financially in 5, 10, or 20 years. Without a clear vision, it is easy to get distracted by immediate desires, trends, or crises. When you have a long-term goal, every decision, every expense, every investment, every career move can be evaluated against whether it moves you closer to that vision. This perspective gives purpose to your actions and transforms ordinary financial behavior into a coherent, intentional strategy that builds wealth steadily. Patience is at the heart of long-term financial thinking. Many people quit or panic because they do not see instant results. They make the mistake of measuring progress on a daily or weekly scale instead of looking at the bigger picture. Long-term planning teaches you to focus on cumulative results rather than temporary fluctuations. Investments grow, savings accumulate, and skills compound in value over time. Understanding that real growth takes years, not weeks or months, protects you from impulsive decisions and keeps you disciplined when results are slow to appear. Another critical element is delayed gratification. Long-term thinking requires sacrificing immediate pleasures for future rewards. This does not mean denying yourself completely, but rather making conscious choices that align with your ultimate financial goals. Opting to save a portion of your income rather than spending it on fleeting entertainment, investing in knowledge rather than instant satisfaction, or delaying expensive purchases to fund a larger plan are all expressions of this mindset. The ability to prioritize long-term benefit over short-term comfort is a hallmark of those who achieve true wealth. Risk management is also easier when thinking long-term. Short-term decisions are often emotional and reactive, leaving you vulnerable to market swings, financial scams, or sudden setbacks. A long-term perspective allows you to evaluate opportunities rationally, understand the potential impact over years, and make calculated moves. It encourages diversified strategies that protect you from single points of failure while enabling steady growth. Thinking long-term reduces fear-driven decisions because you understand that temporary setbacks do not erase cumulative progress. Consistency becomes natural when your focus is on the long term. Small, disciplined actions, saving a little each month, contributing regularly to investments, and learning continuously may seem minor, but repeated over years they produce remarkable results. Compounding works silently and relentlessly in the background, and long-term thinkers leverage this invisible force to their advantage. Those who act consistently without needing immediate reward experience exponential growth and build a level of financial security that short-term planners can only dream of. Long-term thinking also encourages learning and adaptability. As you plan years ahead, you become more aware of trends, shifts in industries, and new opportunities that align with your goals. You start to anticipate changes rather than react to them. This proactive approach allows you to position yourself strategically and make informed choices that compound over time. Every new skill learned, every investment studied, and every insight gained becomes part of a larger strategy designed for enduring success. A long-term perspective changes the way you view setbacks. Instead of seeing failure as an endpoint, you see it as a step in the journey. A lost investment, a missed opportunity, or a financial mistake is no longer catastrophic. It is feedback. You learn, adjust, and continue forward. When you understand that success is measured in years rather than days, setbacks lose their power to discourage you. This resilience and ability to recover quickly is essential for building sustainable wealth. Prioritizing long-term planning also shifts your focus from quantity to quality. You begin to value meaningful investments, high-impact relationships, and skills that last rather than chasing fleeting gains or popularity. Each choice is weighed for its enduring benefit rather than short-term appearance. This mindset allows you to avoid waste, focus resources efficiently, and create strategies that deliver compounded results instead of scattered, temporary wins. Financial independence is closely linked to long-term thinking. It allows you to create a lifestyle that is not dictated by immediate income pressures, but supported by accumulated wealth, diversified income streams, and strategic planning. By keeping a long-term horizon, you reduce anxiety about short-term fluctuations and gain confidence that your efforts today are securing freedom tomorrow. True independence comes not from a single windfall, but from years of deliberate, forward-focused decisions. Long-term planning also enhances your decision-making under uncertainty. When you view the financial journey as a multi-year path, you are less swayed by hype, fear, or peer pressure. You can evaluate risks more calmly, avoid impulsive moves, and focus on strategies that yield steady growth. This perspective gives you patience, discernment, and discipline, which are far more powerful than trying to chase immediate results. Accountability becomes easier when thinking long-term. You can set clear milestones, measure progress against them, and adjust strategies without losing sight of the ultimate goal. These checkpoints provide motivation while maintaining focus, ensuring that daily choices are aligned with larger objectives. Long-term planning transforms random actions into a coherent system, where each decision serves a purpose and contributes to cumulative success. Every choice you make now carries a ripple effect into the future. Spending without a plan, ignoring investment opportunities, or delaying skill development may feel insignificant today, but over years, these small choices define whether you achieve financial security or struggle to get by. Thinking long-term helps you weigh the real impact of each decision, making it easier to prioritize actions that build real wealth while avoiding those that erode it. Finally, a long-term mindset cultivates vision and purpose. Wealth is not just money, it is freedom, stability, and the ability to live life on your terms. Planning for decades ahead gives meaning to your actions today. It encourages you to think strategically, invest wisely, and live intentionally. You begin to act not for short-lived satisfaction, but for a life of security, impact, and opportunity. Every deliberate step taken with the long term in mind compounds into a legacy of financial strength that supports you and those you care about. Chapter 18. Teach yourself patience and discipline with money daily. Mastering patience and discipline with money is the single most powerful habit you can develop, because financial freedom is built not by luck, but by consistent, controlled actions repeated every day. Impulse decisions, instant gratification, and emotional spending are the traps that keep people stuck in financial struggle. Real progress comes when you train yourself to delay desires, evaluate choices rationally, and follow a disciplined path consistently over time. Every decision to wait, save, or invest instead of spending recklessly strengthens your financial muscles and compounds into freedom, stability, and opportunity over the years. Patience is learned, not inherited. It grows when you practice self-control in small everyday decisions. Choosing to save a portion of your income instead of buying something unnecessary teaches your brain to value long-term benefit over immediate pleasure. Every time you resist a short-term temptation, you reinforce a mindset that will serve you through bigger financial challenges in the future. This daily practice shapes your behavior into a predictable, reliable pattern that protects and grows your resources steadily. Discipline works hand in hand with patience. Discipline is the structured framework that turns intention into action. It ensures that even when emotions or distractions arise, you stick to your plan. Discipline manifests in consistent budgeting, automatic savings, regular investment contributions, and careful monitoring of spending. Each of these actions may seem small alone, but together they build momentum that is unstoppable over time. Wealth is never a result of random choices. It is the product of disciplined behavior repeated day after day. Daily practice is essential because habits are formed through repetition. Waiting for perfect conditions or external motivation is a mistake. Real discipline develops through consistent, intentional effort. Allocate specific times to review finances, check accounts, and track spending. Make saving and investment contributions a fixed, non-negotiable part of your routine. Each repetition strengthens the neural pathways that control self-regulation, making it easier to stay disciplined without forcing yourself mentally. Over time, patience and discipline become second nature rather than effortful choices. Small, incremental victories reinforce long-term habits. Every time you delay a purchase or choose to invest rather than spend, you prove to yourself that you are capable of control. These wins create a feedback loop of confidence, showing that self-discipline is achievable and rewarding. As your confidence grows, you start applying patience to larger financial decisions, such as investments, debt repayment strategies, or career opportunities. Daily practice in small matters prepares you to make significant choices with calm, rational judgment, rather than impulsive reaction. Patience and discipline also reduce stress and increase clarity. When you act methodically rather than emotionally, you avoid panic decisions that often lead to losses. Financial setbacks are inevitable, but disciplined individuals respond strategically rather than impulsively. They analyze options, consider outcomes, and choose actions that protect resources and maximize long-term growth. Developing patience allows you to remain composed when circumstances are uncertain, giving you a significant advantage over those who react without control. Another critical benefit is compounding. The decisions you make daily, saving a small amount, investing steadily, or avoiding unnecessary expenses, accumulate over months and years. Compounding is not only financial, it is behavioral. Every disciplined action reinforces habits, strengthens your mindset, and prepares you to handle larger financial responsibilities with confidence. Impatient behavior interrupts compounding, while patience ensures that even modest efforts grow into substantial wealth over time. Self-reflection is key to cultivating discipline. Each evening or week, review your spending, saving, and investment actions. Ask yourself if your choices aligned with your long-term goals and whether they demonstrated patience. Acknowledge successes, learn from mistakes, and adjust strategies accordingly. This reflective practice trains your mind to anticipate impulsive tendencies and strengthens your ability to act deliberately in the future. Discipline grows when you actively monitor and refine your behavior instead of allowing habits to form passively. Automating financial decisions reinforces daily discipline. Automatic transfers to savings accounts, recurring investment contributions, and scheduled bill payments remove the temptation to act impulsively. When routine actions are automated, your behavior aligns naturally with long-term goals, making patience effortless. This system ensures that even during stressful periods or lapses in focus, your financial growth continues without interruption. Automation transforms deliberate effort into consistent results. Discipline and patience also influence opportunity recognition. Those who act impulsively often overlook strategic choices because they prioritize immediate satisfaction. By training yourself to pause, evaluate, and choose thoughtfully, you see opportunities that others miss. Whether it is spotting a valuable investment, negotiating a raise, or identifying a business venture, disciplined thinking gives you the ability to act at the right time rather than reacting impulsively and potentially losing out. Every financial decision is a test of your patience and discipline. Whether it is resisting a sale that tempts you to overspend, waiting for a market dip to invest wisely, or systematically paying down debt, each choice reinforces your long-term mindset. The more consistently you practice patience, the easier it becomes to make rational, strategic decisions under pressure. Over time, this creates a self-sustaining cycle where discipline begets patience and patience strengthens discipline. Accountability strengthens these traits further. Share your goals and plans with a trusted friend, mentor, or financial advisor who can provide feedback and encouragement. When someone else knows your intentions, it becomes easier to follow through and harder to justify impulsive behavior. Accountability creates a social framework that supports your discipline while reinforcing your commitment to long-term growth. Mindset plays a critical role. View money as a tool for long-term growth, rather than a source of instant pleasure. Shift focus from immediate reward to the outcomes of your consistent actions. This mindset reframes spending as a choice and investing as an opportunity, making it easier to practice restraint daily. The more you internalize this perspective, the more naturally patience and discipline become part of your financial behavior. Teaching yourself patience and discipline is not a one-time effort, but a lifelong practice. The challenges, temptations, and opportunities you encounter evolve over time, and the skills you develop today will be tested in new ways tomorrow. By making consistent daily effort a habit, you build resilience, confidence, and the ability to act strategically regardless of circumstances. This continuous practice ensures that you are always in control of your financial trajectory rather than being controlled by impulses or external events. Ultimately, the combination of patience and discipline creates freedom. Financial freedom is not simply about having more money. It is about having control over your life, making deliberate choices, and executing your plans without being swayed by momentary desires. Every daily act of restraint, every conscious decision to invest in your future, every moment of delayed gratification brings you closer to independence, security, and abundance. Daily practice compounds into results that feel inevitable over time. The small victories you achieve each day accumulate into a powerful momentum that sustains your journey even when challenges arise. By committing to teaching yourself patience and discipline every day, you build a mindset capable of withstanding setbacks, exploiting opportunities, and creating lasting wealth. Your financial future depends not on luck, but on the consistency of your actions, the control of your impulses, and the power of disciplined decision-making repeated every single day. Chapter 19. Celebrate progress to stay motivated on your path. Recognizing and celebrating your progress is one of the most powerful ways to maintain momentum, because consistent acknowledgement of achievement fuels motivation and reinforces the habits that drive long-term success. Too often, people focus solely on what they have not accomplished, creating frustration and discouragement that slow their progress. Celebrating milestones, no matter how small, reminds you that every effort, every choice, and every step forward is moving you closer to your financial and personal goals. Motivation thrives when progress is visible and acknowledged, transforming hard work into tangible satisfaction that encourages you to keep going. Progress is not always measured in massive achievements. It is often found in the small, deliberate actions that compound over time. Paying off a portion of debt, saving a certain percentage of income, learning a new skill, or resisting unnecessary spending are all meaningful steps forward. Recognizing these victories builds confidence and validates your efforts. Every positive action reinforces your ability to make smart decisions and shows that growth is happening even when results seem slow. By celebrating progress, you create a feedback loop that strengthens determination and inspires continued action. Tracking achievements is a practical way to celebrate progress. Keeping a journal, using spreadsheets, or even simple lists of completed tasks allows you to see how far you have come. This visibility turns abstract efforts into concrete evidence of growth. It also enables reflection on what strategies are effective and which areas need adjustment. When you clearly see progress, motivation increases naturally because you understand that every choice you make matters and contributes to the larger vision of financial freedom and personal success. Celebration does not mean extravagance. It is about acknowledgement and recognition, treating yourself occasionally, enjoying a moment of pride, or sharing achievements with trusted friends or mentors creates emotional reinforcement. These moments of recognition provide satisfaction and a sense of accomplishment that energizes you to continue disciplined effort. They are reminders that the journey is worthwhile and that your efforts produce tangible results. Celebrating progress maintains emotional balance, prevents burnout, and fosters long-term consistency. Acknowledgement also strengthens resilience. When you encounter obstacles or setbacks, remembering past achievements can provide perspective and motivation. Progress, no matter how small, is evidence that you are capable of overcoming challenges. It reinforces confidence and reminds you that obstacles are part of the journey, not indicators of failure. Celebrating past wins gives you the strength to persist, make smarter decisions, and continue building momentum toward your goals. Sharing success with others amplifies the impact. Discussing milestones with mentors, peers, or family members creates a supportive environment that reinforces commitment. Recognition from others not only validates your efforts, but also encourages accountability. When progress is visible to a community or support network, it fosters encouragement, shared knowledge, and inspiration, making your journey more rewarding and sustainable. Human connection and acknowledgement enhance motivation and create a sense of purpose that drives long-term achievement. Celebrating progress also reinforces the habits that create success. Every time you acknowledge that saving money, investing, learning new skills, or practicing discipline has produced results, you strengthen the behaviors that led to those outcomes. Recognition acts as a reward mechanism that reinforces repetition, making it easier to continue performing these positive actions consistently. Habits are built on repeated reinforcement, and celebrating progress ensures that your behaviors become ingrained over time, leading to sustainable financial growth. Mindset is deeply influenced by the practice of acknowledging progress. Focusing on growth rather than shortcomings shifts your perspective from frustration to empowerment. Instead of feeling overwhelmed by goals, you see evidence that you are capable of achieving them. This positive mindset attracts opportunities, encourages strategic thinking, and maintains your energy for long-term efforts. Celebrating progress transforms your journey from a series of challenges into a narrative of achievement, motivating you to continue moving forward with purpose. It is essential to celebrate both small wins and major milestones. Small wins build daily motivation, creating momentum through consistent, manageable steps. Major milestones provide perspective and reinforce long-term commitment. Recognizing these achievements ensures that you remain engaged with your goals, prevents complacency, and fuels the drive to reach higher levels of success. Each acknowledgement, no matter its size, contributes to a mindset that values effort, consistency, and continuous growth. Emotional satisfaction is another reason celebration is critical. Achieving financial or personal milestones produces positive feelings that enhance well-being. Rewarding yourself emotionally creates a stronger connection to your goals, making the process enjoyable and sustainable. When progress is celebrated, the journey becomes fulfilling, not just the destination. Positive emotions associated with achievement increase resilience, focus, and energy for continued effort. Consistency is reinforced through regular recognition. By acknowledging progress daily, weekly, or monthly, you create a rhythm that sustains motivation over time. This routine makes it easier to maintain momentum and ensures that you are continuously aware of your improvements. Regular celebration reduces burnout, provides psychological reinforcement, and keeps your focus aligned with long-term objectives. Progress, when acknowledged consistently, becomes a habit that fuels further achievement. Celebrating progress also strengthens vision. Each achievement is evidence that your plans are working and that your efforts are aligned with your ultimate goals. Recognition creates clarity about what strategies are effective and where to focus energy. When progress is visible, it reinforces confidence in your plan, ensures that your actions remain purposeful, and motivates continued commitment. A clear vision, supported by consistent acknowledgement of growth, provides a roadmap that guides decision-making and maintains direction. The habit of celebration teaches gratitude. Recognizing progress fosters appreciation for the effort, resources, and opportunities that make achievement possible. Gratitude enhances perspective, reduces stress, and strengthens mental resilience. By appreciating progress, you create a mindset that values effort, persistence, and growth, which fuels motivation for ongoing work. Gratitude transforms the journey into a meaningful experience rather than a series of tasks, reinforcing commitment to long-term goals. Acknowledgement also mitigates discouragement. When challenges arise or progress seems slow, recalling milestones achieved helps maintain motivation. Celebrating wins creates a psychological buffer against setbacks, allowing you to approach obstacles with confidence and determination. Motivation remains steady because recognition of progress reinforces belief in your ability to overcome difficulties and continue moving forward. Emotional resilience grows alongside disciplined effort, making success sustainable. Intentional reflection enhances the impact of celebration. Regularly reviewing achievements, noting lessons learned, and planning next steps creates awareness and insight. Reflection transforms acknowledgement into strategic learning, allowing you to refine approaches, optimize effort, and maintain focus on high-impact actions. Celebrating progress is not passive, it is an active process that strengthens skills, insight, and decision-making. Reflection ensures that each milestone contributes to continuous improvement and long-term success. Ultimately, celebrating progress is a strategic tool for sustaining motivation, discipline, and growth. It reinforces positive behaviors, strengthens confidence, enhances resilience, and maintains energy for the journey ahead. By recognizing every step forward, whether small or significant, you ensure that your path to financial freedom and personal achievement remains engaging, purposeful, and sustainable. Progress is proof that effort works, and acknowledgement is the force that transforms effort into enduring momentum. The act of celebrating progress transforms the journey itself into a source of motivation. Each victory validates your commitment, strengthens habits, and inspires continued action. Momentum builds naturally when progress is recognized and reinforced consistently. By creating a system of acknowledgement and celebration, you ensure that motivation remains high, discipline stays strong, and long-term success becomes inevitable. Chapter 20. Give back generously to create purpose in your wealth. True wealth is measured not by what you keep, but by the impact you create when you give. And giving back generously transforms money into purpose, because wealth without meaning is empty and unfulfilling. Financial success becomes far more powerful when it is paired with intentional action that improves the lives of others, strengthens communities, and leaves a lasting legacy. Giving back is not just about charity. It is about creating a ripple effect where your resources, knowledge, and influence empower others, inspire growth, and reinforce your own values. Purpose in wealth emerges when every dollar, every effort, and every opportunity contributes to something larger than yourself. Generosity cultivates perspective. It shifts focus from accumulation to contribution and teaches that financial abundance is not solely for personal comfort, but for creating meaningful outcomes. When you give intentionally, you see the direct connection between resources and the positive changes they can make. This perspective enhances decision-making, encourages disciplined financial planning, and fosters a mindset that balances personal growth with societal impact. Generosity grounds your wealth in responsibility, empathy, and awareness. The habit of giving back strengthens character. Choosing to share your resources requires mindfulness, patience, and careful consideration of how to make the greatest impact. It teaches humility, gratitude, and discernment. Generosity is not impulsive, it is deliberate and strategic, ensuring that your contributions are meaningful, sustainable, and aligned with your values. This process shapes you into a person whose wealth is inseparable from purpose, creating alignment between financial success and personal integrity. Giving back also reinforces motivation. When your wealth is tied to a higher purpose, it creates emotional energy that drives continued effort, discipline, and strategic thinking. Knowing that your success enables positive change inspires you to maintain focus, work diligently, and pursue opportunities that multiply both financial growth and social impact. Purposeful wealth transforms routine financial management into a meaningful pursuit that benefits both yourself and others. Strategic generosity amplifies impacts. Effective giving is not about sporadic or random contributions, but about planning, prioritizing, and investing in ways that produce lasting value. This might include supporting education, mentoring, funding community projects, or creating opportunities for others to grow. Strategic giving requires understanding needs, identifying areas where your contribution makes the most difference, and ensuring that resources are used efficiently. This approach maximizes the benefit of your wealth and enhances the sense of purpose that motivates further action. Generosity nurtures relationships and networks. By giving back, you build trust, respect, and credibility with those around you. Meaningful contributions create bonds with people who share similar values, inspire collaboration, and generate opportunities for mutual growth. These relationships reinforce your own journey, provide mentorship and guidance, and create a supportive environment for continued personal and financial development. Wealth used to help others expands influence, opens doors, and strengthens social capital. The act of giving back also enhances emotional intelligence. Engaging with the needs of others, understanding their challenges, and responding thoughtfully cultivates empathy, patience, and insight. These qualities are critical not only for personal fulfillment, but also for leadership, negotiation, and decision-making in business and finance. Purposeful generosity creates a feedback loop where emotional growth and financial stewardship reinforce each other, producing both internal satisfaction and external impact. Giving back fosters long-term vision. When your financial plan incorporates meaningful contributions, you think beyond immediate gains and short-term accumulation. You consider legacy, sustainability, and the broader impact of your resources. This forward-looking perspective aligns your decisions with enduring outcomes, encourages strategic planning, and ensures that your wealth contributes to enduring value rather than temporary comfort. Purpose-driven wealth shapes not only your future, but the future of those touched by your actions. Gratitude and fulfillment are natural byproducts of generosity. Witnessing the positive effects of your contributions cultivates appreciation for your own journey and resources. It shifts the focus from scarcity to abundance, from fear to empowerment, and from self-interest to shared success. Gratitude strengthens resilience, maintains motivation, and enhances well-being, making wealth not only a financial tool, but also a source of personal enrichment and life satisfaction. Teaching and mentoring are powerful forms of giving back. Sharing knowledge, experience, and skills accelerates the growth of others and reinforces your own mastery. When you guide others toward financial literacy, career advancement, or personal growth, you create exponential impact. Mentorship multiplies the value of your wealth by translating it into human capital, inspiration, and tangible results. Purpose is amplified when your success empowers others to achieve their own goals. Philanthropy creates legacy. Purposeful giving ensures that your influence continues beyond your own lifetime, whether through financial support, programs, or initiatives. Contributions can improve education, healthcare, entrepreneurship, or community infrastructure. The wealth you give becomes a permanent force for change, extending your impact and creating a story of meaning that transcends personal gain. Legacy gives your efforts a timeless dimension that motivates strategic planning, disciplined saving, and intentional investment. Generosity teaches humility. Recognizing that your wealth is a tool, not the end itself, shifts your mindset from entitlement to stewardship. This perspective encourages thoughtful allocation of resources, careful decision-making, and a focus on creating value rather than simply accumulating wealth. Humility ensures that your success benefits others as much as it benefits you, strengthening purpose and reinforcing the principles of ethical financial growth. Giving back also encourages discipline and planning. To contribute effectively, you must manage your finances wisely, create sustainable strategies, and prioritize actions that align with both personal and philanthropic goals. This discipline ensures that generosity is consistent, impactful, and aligned with long-term objectives. Purposeful giving requires foresight, structure, and responsible decision-making, making your wealth a vehicle for both growth and meaningful influence. Impactful generosity increases satisfaction and joy. When you witness the transformation your wealth enables, whether in a community, an individual, or a cause, you experience fulfillment that money alone cannot provide. This sense of purpose energizes you, reinforces commitment to your goals, and strengthens the connection between effort, success, and contribution. The emotional return from giving complements the financial, creating a holistic sense of achievement and well-being. Purposeful wealth inspires others. Your actions set an example for peers, family, and community members. Generosity models values, encourages collaboration, and motivates others to contribute meaningfully by demonstrating how wealth can be leveraged for positive impact. You create a culture of responsibility, empathy, and growth that amplifies the influence of your success. Purpose spreads, and the impact of your wealth extends far beyond your own efforts. Giving back fosters resilience in the face of abundance. Wealth alone can create complacency or isolation, but channeling resources toward meaningful action keeps focus sharp and priorities aligned. It reminds you that success is not only personal, but relational and societal. This perspective encourages continued effort, strategic thinking, and disciplined growth, ensuring that wealth is both productive and purposeful. Finally, creating purpose through generosity ensures that your financial journey is fulfilling in every sense. It transforms accumulation into contribution, stability into empowerment, and success into legacy. Purpose-driven wealth aligns your actions, mindset, and vision, making your financial journey meaningful, sustainable, and deeply rewarding. Every act of giving compounds in value, impact, and personal fulfillment, completing the transformation from money to true wealth that benefits both yourself and the world around you.